Hello everyone, welcome to Officer 24/7. My name is Niharika Valia Bhatnagar and I am starting with the class of AFM, that is Accounting and Financial Management for Bankers, and this is the mini marathon. Okay, so what am I going to talk about today? Today I will be starting with the basics of the area of accounting. The first question talks about, so this is a particular, I think in this mini marathon we'll be covering widely module A along with parts of module B. I've covered both, that is numericals as well as the MCQs. So stay tuned and let me know. And if you like this particular session, please go ahead and share it to your peer group, as well as don't forget to like it. And if you haven't subscribed to our channel yet, you should do it as early as possible, because we are coming up with way more things when you're preparing for this examination, right? So let's move on. Okay, sorry. Chale. What is the definition of accounting, everyone? What do you mean by the term accounting? The process of analyzing financial statements, the systematic recording, reporting, and analyzing of the financial transaction, management of cash flows within the organization, and the process of marketing financial services. See, when we talk about accounting, now accounting was introduced so that we can actually understand what's happening in the business. So we are just trying to note down each and everything that is happening. So this is not only the process of analyzing. First of all, you record things, only then you can analyze. How can I study without making my own notes? Every time I start teaching, the very first thing that I talk about is that are you making quick notes? Are you doing your own level of self-study? The point is that when you want to analyze something, right, you need the resource at least, and the resource is your own business, so that means you will have to record. You are the one who has to record. There is systematic recording, reporting, analyzing of financial statements. So this is the systematic recording, reporting, and analyzing. Okay? This is actually the language of the business, because money tells you about measuring it. Which of the following is within the scope of accounting? Inventory management, human resource planning, customer relationship management, and quality control in production. Which is within the scope of accounting? Acha. HRP is not a part of it. Why? Because HRP can clearly be said this is a qualitative thing. You bring people into the organization because you find them good. Their skills are good. Their working is good. They might be skilled. They are loyal to the organization. They are experienced. None of these things talks about money, so we cannot record it. Customer relationship management is again something in which we do not talk about money at all. It's about our relationship with the customers. This helps us to grow further, but this cannot be quantified as something that this is the main thing. Again, next point is quality control in production. Quality control in production is basically something that relates to the area of making your production better. That means there should not be any defects, है ना? And last is inventory management. Inventory management is basically related to, we are having a stock, that is opening stock. Then you make more purchases. During the year, what happened was I had 10,000 rupees worth units. Then I got 20,000 units more. So technically by the end of the year, I should be having goods worth rupees 30,000. But to my surprise, since I've sold good number of goods, I was left with hardly 4,000. That means I say that 26,000 rupees worth units have been sold. This is a part of inventory management. This is a very important part. Every organization wants to know what is left by the end, because there are many organizations which do not record how much is being used every single time. That means they do not look at what is being issued. They look at it by the end of the year, that what is consumed and what is left. That is why sometimes they face theft as well. So that is how they check it out. That is, I would say, this is backward working. Okay, this is done in all those organizations where they use just-in-time technique. Just-in-time technique is you'll prepare the thing just when the person is requiring it, not before that and storing it for a long period of time. Okay. Next point. Ind AS is aligned with which international accounting standards? IFRS, then that is International Financial Reporting Standards, International Financial Indian Financial Reporting Standards International, and International Accounting Standards, or Indian Generally Accepted Accounting Principles. वैसे when we talk about GAAP is given which is actually followed by US. ठीक है. So that is they call it GAAP, Generally Accepted Accounting Principles. We also follow GAAP in terms of our accounting there. There are certain things which we believe these have to be accepted throughout the country. ठीक है. Then the correct answer is International Financial Reporting Standards. The ones which are actually followed is IFRS. ठीक है. So let's continue further. Done? The correct answer is IFRS. These are the standards which are followed internationally, and due to this we made our Ind AS. Earlier we were following AS. AS was issued by ICA, and when this particular thing was introduced, now when Ind AS was introduced, it is said that it is introduced by ICA. But if you check out the Ministry of Corporate Affairs website, you will see that this is issued by Ministry of Corporate Affairs under Companies Act. The Ministry of Corporate Affairs is issuing it, but these are made by the ICAI, that is Institute of Chartered Accountant of India, along with their committee, which is National Financial Reporting NFRA. That is NFRA. NEFRA. NFRA is the one which records all these things and helps them out in the working. So that is earlier they had Accounting Standards Board, ASB. ASB used to work and prepare all these things. And then came the National Financial Reporting Authority, that is NFRA. ठीक है? Done? Next question. What is the fundamental accounting equation? The fundamental accounting equation is also called balance sheet equation. It is also called accounting equation. It is also called fundamental or basic accounting equation. So this has multiple names. But this is the base of the entire accounting portion altogether, I would say. This is the base with which the entire working or foundation of accounting was made. So what's the topic? It says assets is equal to liabilities plus owner's equity, assets minus liabilities is equal to owner's equity, assets plus liabilities equal to owner's equity, and assets multiplied by liabilities is equal to owner's equity. What's happening in this case? Now, the point is, do you know about the concept of debit is equal to credit? This is what we call it as dual aspect concept. If I get 10 rupees, what can I spend? 10. If I get 20 rupees, what can I spend? 20. If I get 30 rupees, what can I spend? 30. This is how we work now. So then when we talk about this area, we know that we have some assets. Those assets that we have got is because either we put our own money, that is my owner's equity, and the second one is capital. Okay? So in this case, it is assets is equal to liabilities plus owner's equity. This means that if I spend money, for example, I bought a particular equipment worth rupees 1 lakh and I have cash worth rupees 20,000. So how is this money with me? Because I believe what I can say is 80,000 was my own money that I invested and I took a loan from you for 40,000. Now this is how I got this 1,20,000 in my business. Done everyone? Next question. What is the purpose of cash flow statement? Why do we prepare a cash flow statement? To show the profitability of the company, to show the sources and uses of cash, or for a specific period, or we can say to summarize the revenue and expenses and to show the financial position of a company at a specific point in time. When we talk about cash flow statement, it is prepared under Ind AS 7 and AS 3. Accounting standard 3 talks about the money that we possess. Then Ind AS 7 is Indian accounting standard. Okay. So in this case, for as per both the areas, when we prepare this cash flow statement, so cash flow statement talks about inflow and outflow of cash. So nothing else but the basic of how do we get the money, that is to show the sources and uses of cash. That means we are looking at inflow and outflow of cash. Here comes the next question. After closing entries are made, which accounts will have zero balances? Permanent real accounts, temporary, nominal, both permanent and temporary accounts, or none of them? Which will have zero balances when we are closing the books of accounts? See, there is only one particular thing. The real accounts will always be carried forward. For example, whatever my closing balance of cash will be, in the next year, it becomes a brought down cash. Isn't it? So in this case, the correct answer would be, it is a temporary nominal account. Okay? So when we talk about this area, it's a temporary nominal account. The temporary or nominal account talks about all the expenses and the incomes. Since expenses and incomes are used to find out the profit or the loss. So in this case, this particular account talks about income or expenses of a business. Next point. If a trial balance does not balance, what does it indicate? There are errors in the financial statements. There are no errors in financial statements. The company is in profit. The company is in loss. If the trial balance does not balance, this is a weird situation. Huh? What has happened is that this is how I'm making the trial balance. This is the debit side and this is the credit side. And there is a mismatch. This side is 20,000. This area is 18,000. That means there is a mismatch. Such a mismatch would mean that there is some arithmetical, not any other error, everyone. They cannot trace down any other thing other than arithmetical errors. Okay? So in this case, the correct answer is, there are errors in the financial statements. And how do they balance this situation? Because what happens is, when you create this now and you have a problem there, that means your debit side and credit side. The moment you find out this side is 20,000, the moment you find out this is 18,000, and there's a difference of 2,000. So this area has to match. If they do not match, then you are not going as per the dual aspect concept, and that means, since in the journal entry you had debit is equal to credit, followed by ledger in the same concept, followed by trial balance in the same balance, so how can debit not becomes equal to credit? If such a situation is occurring, that simply means that you made a mistake. So when you make a mistake, what do? First of all, you will try to rectify it. Rule, right? If we face a mistake, then we will have to correct it. So you open a dummy account that is called suspense account. You will write 2,000 here and you will make it 20. But you will remember that this 2,000 has to be found out. What do we do with this 2,000 rupees? We'll have to look forward to it. Done. This is the errors of trial balance and how do we correct it. Next question, it says, what will be the amount of the loss that is suffered on machinery purchase for rupees 10,000 on 1/1/2010 and sold for 5,000 on 30th of June 2012. The rate of depreciation charged is 10% on written down value. Acha everyone, let's look at this. First of all, I bought something for 10,000 rupees on 1/1/2010 and sold for 5,000 on 30th of June, right? Okay, so this question started with around 10,000 rupees. Huh? So we had 10,000 rupees in 2010. So assuming that this is basically something which started in December and going on up from 1st of Jan to 31st of December, they are working in such a way that the rate of depreciation charged 10%. Now this point we had started from 2010 to 2011, है ना? 1st of Jan to 31st of March. This is 2010. 31st March 2010. This is basically something which I can say is basically 1 year, that is 10%. So, and then the second year, we didn't go for the entire year. This is 2010 and this is 1st Jan 2011 to acha, nahi. Let me just make it clear for you. Now the point is 1st of Jan. Okay. 1st of Jan 2010 to 31st of December 2010. Second is basically 1st of this is December, and now look at this, 1st of Jan 2011 and this is 2011 end. Now if I start from 2012, I end it within 6 months. So first is 10% on 10,000. They are using WDV method. So this would be 10%, that is 1,000. So you're left with 9,000. So technically first thing that you're getting is a depreciation of 1,000 rupees for the first year. For the second year, you have 900 rupees. And the rate of depreciation, what would be the amount of loss? And this is 1,900. And for the third year, that is, we are using it for 6 months. So you have to have it minus 900. We are left with 8,100. From this 8,100, I will deduct 5% of it. Actually, this question has a little loophole. It should state what is the financial year that we're talking about. We are looking forward towards the area of 8,100 minus 5%. That is 405. So if I remove that from 8,100, I remove 5%, it will give me an amount of 7,695. While at this point of time, we are selling it for 5,000. This is my book value. This is my selling price. That is of 5,000. So what I'm left with is 2,695. As per this, I am having a loss of 7,695 minus 5,000 of 2,695. I'm assuming that I'm not using the 1st April to 31st of March. In case it would be used as per that, then the values would be different. So I'm just changing the particular question a bit. I hope this helps you out in understanding what exactly is being done. Okay. This would be 2,695. Okay. The answer is 2,695. And this one is C. Okay, now let's move on and talk about the next question. The next question is again related to the area of depreciation. They say that you got a machine on 1st of January 2020 for rupees 1,20,000. You spent an amount of 30,000 on installation. Total amount 1,50,000. Residual value for 5 years is 5,000 minus 5,000. This makes it 1,45,000. Right? On 1st of July, there were repair expenses incurred to the extent of 2,000. Any kind of repair which is basically capital in nature, that will become a part of the particular thing, because if it is increasing the output, if it is increasing the productivity, if it is doing something which is increasing the capacity of that particular machinery, only then I can say, nahin, this is a capital expenditure. Otherwise, it's not a capital expenditure. Then it comes out to be 1,45,000. Then what are they asking about? Depreciation is provided at the rate of 10% under the written down value method. Okay, we are using the written down value method, nothing else. So in this case, what would be the answer? Try it out. It is 1,45,000 right now, na? Chaliye, let's discuss the question there. If I look forward towards the calculations there, I've got 1,50,000. In the first year, the depreciation is for 10% now. They want what is the value after? What is the value after the what total depreciation after second year? Take care. Okay, now I've got my answer. In this case, I'm assuming they started from the 1st of January only to 31st of December 2010. Repair is being made, ignored. First depreciation has to be charged on 1,50,000 minus 10%, which is 15,000. We are left with 1,35,500 minus 10% is 13,500. And in this case, the total depreciation portion would be 15,000 and 13,500. This is 15,000 and this is 13,500. When you total it, it will go up to the area of 28,500. Okay, I hope now it is clearly visible to you. The calculations are shown there. Have a look at it, everyone. Done? Done, everyone? Chaliye. Now, let's move on to the next question. The answer is 28,500. In this case, it is clearly used that we are starting with the area of 1st of Jan to 31st of March, 31st of December. Normally, we have it for the financial year, starting from 1st of April to 31st of March. So even I have a habit of using that. But in some cases in depreciation, they do not use it. They use it this method. Okay? Now, the WDV of an asset after 3 years of depreciation on reducing the balance method at the rate of 15% is 49,130. What was its original value? 40, 80, 45, 70 to 50. Acha. Now we are trying to find the original value and we are going back after 3 years. So basically 49,130 is after deducting depreciation. If it is 100%, that means after we are removed with 15, we are left with 85. Then you remove the next percentage, that is 85 into 15%, that is 12.75, right? That is 85 minus 15% is equal to 72.25. This was the first year, this was the second year, and now let's look at the third year. 72.25 and minus 15%. Minus 15%. We are left with 61.41. So I can say that 49,130 is basically 61.41%. 49130 is 61.41% of something. The total amount comes out to be 80,000. What did I do? I'm not using anything else but just taking the value of that particular asset as 100 and finding out what should be the value. I haven't done any further calculation. I just took the value at 100 rupees, removed the depreciation for 3 years. So whatever percentage is left, that means if I would have invested 100%, after 3 years, the remaining amount would be 61.41%. That means if I look at it, then 49,130 is 61.41% of something. Now multiply it by 100 and that is where you'll get 80,003 rupees. So that is where I'm just removing that part and taking the rounding of the same. Okay, na? So in this case, the answer comes out to be 80,000. Then comes, what is the accounting entry when a bill of exchange is accepted? What would be the accounting entry, everyone? Debit accounts receivable, credit bills payable. Debit the bills payable, credit the accounts payable. Debit bills receivable, credit cash. Debit the cash, credit the bills receivable. है ना? We are having a bills of exchange which is being accepted. That means, acha, if I am, there are 3 parties, na? Drawer, payer, drawer, drawee, pay. The one who issues the bill, he will say, I have a bill receivable against my debtor. And the drawee will be like, array, I have a bills payable, 2 bills payable. For him, it's a liability against my creditor. And pays the person if drawer asks someone else to receive the money, that you receive the money on my behalf. So this is the point. In this case, we have to look forward to that. The moment the drawer is the one who issues the bill, and drawee is the one who accepts the bill. If he accepts the bill, so the accounts payable would be debited and to bills payable. Okay, I think all these points have a little problem there. It is for B, it has to be accounts payable. Okay, it is actually a payable thing. So there is one error, that is in A point, it should not be receivables, it should be payables. This payable would mean creditor. Okay? Creditors are also called account payable. But in the area of Companies Act, there is one more thing, trade payables. Trade payables includes both. That is accounts payable, that is our creditor, along with bills payable. That is again a form of creditor, which through to whom we have given a written consent that yes, we'll be paying you. Okay. Next question. A bill of 5,000 was discounted from the banker for 4750. The bill was dishonored at maturity. The drawee pays 60% of his acceptance. What is the amount of bad debts? If the value is for 5,000 and the person said, I cannot pay you the entire amount. Again, this happens sometimes. The people have more of their liabilities than their assets. Overall, I got a bill of rupees 5,000 and I needed money urgently. So I sold it off. Sold it to the bank. Bank went to that person and said that you need to pay me. The bill has been sold to me. The person said, I don't have money. The bank comes to me and says, you got money on behalf of that person, now give me my money back. But bank got its 5,000 rupees. Because this gap was their income. They were supposed to receive their income. If they didn't receive from the debtor, then they will receive the same income from me. One thing sorted. Next point is what? Then we have what is the amount of bad debts. He said that he can pay. He cannot pay the entire 5,000 rupees. When I went to him, he said, I cannot pay you the entire 5,000 rupees, but I can still pay you. I said, how much can you pay me? He said, I can pay you 5,000, 60%. 60% of the 5,000 I can pay you. I said, what about the remaining 40%? He said, I cannot pay you the remaining 40%. I said, why? He said, I have turned bankrupt. My liabilities are way more than my assets. So I cannot pay each and every liability completely. So I'll be paying them proportionately. So I said, how much amount can you give me? He said, I can pay you 60%. So remaining 40% is a dead loss. It turns out to be rupees 2,000. Done everyone? So the correct answer is this 2,000 rupees. Next point. Find the due date of a bill of exchange dated 9th December 2007 payable after 45 days. 25th of January, 24th of January, 26th of January, 27th. Acha, always remember one specific thing everyone. If in case the question states that there is a specific bill has to be paid and the due date falls on a public holiday, it's a public holiday, then there would not be any of the payments to be made on that day. So 1 day previous would be the answer. 25th of Jan, 24th of Jan, 26th of Jan, 27th of Jan. 25th of January, acha theek hai. 45 na, it's the 9th of December. So we have 31 minus 9. So I can say it would be around 22 days of December and 23 days of Jan. This is complete 45 days. After this, add 3 days. 3 days of grace. ठीक है ना? Okay. Visible everyone? That would be 3 days of grace. Once the grace is also there, what are we left with? This means the due date comes on 26th of January. We all know that 26th of January is a holiday. That means to choose it on 26th of January is wrong. It would be before that. The answer is 25th of January. है ना? The answer is 25th of January. Okay, so let's look at the next question now. This is a question of module B and this is related to the area of shares everyone. E Limited has allotted 10,000 shares to the applicants of 14,000 shares on pro rata basis. Pro rata means people asked for 14,000 shares, and I said I don't have 14,000 shares, I'm really sorry, I can give you only 10,000 shares. They said fine. The application money on another 6,000 was refunded. That means 6,000 people were more there to whom we said, "Nahi, I don't have money for you. I am really sorry." So I've got a total of 20,000 shares which people applied for, and I could give them only 10,000 shares. The amount payable on the application was rupees 2. Sitaraman applied for 420. They want to know what is the number of shares allotted to him. Obviously, we can see that these people are the ones who have applied for a lot of shares, but we could give them only the shares that we have in our pocket, right? If I have hardly 10 chocolates in my shop and you ask me that, "Ma'am, I need 14," I'll say I have only 10. I cannot give you more than 10. Agreed? So now in this case, that's the problem that is happening with Sitaraman. Sitaraman said that he would want 420 shares. But what is the amount of shares he would have got? There's one specific rule, everyone. If you know the pro rata, this is pro rata na, and in this case they have given you share applied. If they have given you share applied, then you have to divide it by the total share applied, and you have to multiply by total share allotted. This means the total share applied was 14,000 multiplied by allotted 10,000 divided by 14,000. Acha, nahi, sorry. This would be, his share is 420 na. Yes. So his share would be taken as 420. Now look at this, everyone. 14 3s are 420, right? So in this case, it comes out to be 300 shares. It's obvious he has applied for more, but we do not have that much amount of shares, so we give him less. So in this case, it turns out to be, for those 420 shares he has asked for, I can give them only 300 shares. This question can be converted further into a case study, and they can ask you what is the amount of application money that he has paid and the amount of adjustment. If I look at the amount of money that he would have paid is 420 multiplied by 2, he has paid 840 rupees, right? But I can give them an adjustment of hardly 3 into 2, 600 rupees. Remaining 240 rupees is an excess money he has paid to us. Now either I adjust it in the next call, or I tell them, "Sir, I'm refunding you. In the next call, whenever the amount comes, you pay." Technically, this portion of pro rata, the portion of installments there, this does not exist anymore. Now we have a demat account. If I want to buy a share, I'll buy the entire share. If I have to sell the share, I'll sell the entire share. There is no other thing. Okay? Okay. I think now it would be visible. Done, everyone? Look at the entire process. We are supposed to pay 840 rupees. We are done with it. Then this is the excess money. We are done with it. So we have solved this entire portion. I hope this brings up the clarity. Done? I hope you've seen the question now. Let's move on. The answer is 300 shares. Okay? Now comes the next question, everyone. What is the accounting entry for bill of exchange? Acha, ye to humne kar liya. We're done with this question na. So I'm moving on. Okay, this is a long question and this requires a little space even. So I hope it is visible now, everyone. This is again a big question on the area of, towards the area of shares. And these kind of questions are normally asked as case study. Not one question, but multiple questions. So from one question, I'll discuss all the aspects, And since you can see, I've just kept the camera off for the moment. Okay? Acha, now look at this, everyone. It says that we have got 4,000 shares for 10 rupees each on application 3, allotment 2, 3, 2, and then we have 4, and then we have 1. This is, okay, this is entire 10 rupees. We are sorted with it. Application was received for 6,000 shares were rejected. For 6,000 shareholders, we literally said, sorry, I am not going to give you any share, right? We decided that. How much amount will be now, and pro rata allotment was made to the applicants. Achha, we issued 4,000 shares. So technically, pro rata allotment was made to the applicants for 10,000 shares. See, 10,000 people got hardly 4,000 shares. They would have asked for more, but we are giving them less, you know, because again we have a limit of 4,000. How much amount will be received in cash on the first call when excess application money is adjusted towards the amount due on allotment and calls? Now this question is not a small question. This is a series of multiple calculations. See, I'm taking it to the next pointer. I'll discuss the entire amount. This is the answer is seen to you, but don't look at the answer first. Just look at how we can calculate it. For 10,000 shareholders, we can give them 4,000 shares, right? The number of excess shares these people have applied for is 6,000 shares. They have applied for 6,000 shares, which is a good number. This was the excess shares they have paid for. Normally what happens is if I had to pay for 10 shares and I paid for 12 shares, normal. So you say that, ma'am, kya farak padta hai? Why don't you adjust it in the next time? If I am a regular customer of a grocery store, this time I gave them rupees 100, and normally I keep on buying things. It's like, acha, theek hai, let's adjust it in the next time. If I return the money today, then you'll come back to me tomorrow, and then we'll have to adjust it again. It's fine. You've given me extra. I'll adjust it in the next one. We know that we have got multiple calls. First call was 3, 2, 4, 1. This is like application, allotment, then first call and final call. You have to pay. If just paid this one, all these three are left now. So that means we have got 6,000 rupees, 6,000 shares on which we have received 3 rupees. Excess shares, the shares which are something for which we are not even paying right now. Which even if I've paid, those shares are not mine. So this money has to be returned. Normally, it has to be returned. But you can also adjust it. If people applied for 10,000 shares, we said that, sir, 10,000 shares we do not have. I'm really sorry. He said, what number of shares you have? I said 4. They're okay. Then whatever extra money is left, you adjust it in the future calls. Na. First of all, you'll return money to me. Then you'll come to me and say, sir, allotment time, sir, the first call time, sir, the final call time. Why to trouble me? If I've given you in advance, I trust you. You adjust it in the upcoming calls. So what is the excess amount they have paid? They have just paid the application money, but they have paid a huge amount of application money. Hai na? So they have paid the total amount of 18,000. Now find out the value of allotment that is due. I'm looking at the allotment due. It is 2 into 4,000. The allotment that I have to pay is rupees 8,000. Hai na? The allotment that I have to pay is for rupees 8,000. From this 18,000 I can use 8,000. Hai na? So you are like, sir, everybody else we are supposed to pay for allotment. These people have paid a lot. So we're like, sir, adjusting your whatever extra amount you have paid, don't pay the allotment portion. They were really happy. They said, acha, chalo. Even if we have given, if we didn't get the shares, whatever money extra we have paid, that is being adjusted in the further calls. It's good. Then these people are supposed to pay 4 rupees for what? 4 rupees for 4,000. They are supposed to pay the first call now. For the first call, they are supposed to pay 16,000. Now, from out of 18,000, 8 was used in allotment. Remaining 10,000 was still there. Now, due amount for the first call is 16,000. So let's adjust the remaining 10,000 here now. We're like, sir, overall for allotment, you were supposed to pay 8,000. You have already given us 18, so adjusting 8 out of it. Now, we're like, sir, for the first call, you were supposed to pay 4 rupees. for 4,000 shares. So that means you were supposed to pay 16,000 rupees. But you've already given us 18,000. Out of that, 10,000 was still left. Adjusting it, now you have to pay 6,000 rupees only. For these kind of questions, you don't really have to work hard. You just have to be clear about what's happening. This is nothing but a process where you have paid a huge amount of money already and you had no clue about it, that you won't get the particular thing. And then you're like, Acha, I'm a regular customer. I'll come back to you tomorrow. Then whatever I'll buy, just adjust it there. But the shopkeeper has to remember what amount of adjustment is still left. And we have to remember what amount of money is still left for adjustment. Otherwise, one of us will gain, one of us will lose. It is never a win-win situation unless both of us are informed about it. When a company repays a long-term loan, how does it affect the cash flow and fund flow? When I repay a loan, what is it? Number one, inflow or outflow? I'm losing money. I'll be crying about it. Array, I have to pay back a loan, but I'll be happy even because liability is going away. One thing is sorted. So this is an outflow of money. Outflow means plus or minus, everyone. When money comes in, it's a plus. When money goes out, it's a minus. This is inflow and this is outflow. In case of outflow, in terms of cash, what will it be? No, it would be D. The answer would be D for this. For cash flow, I'm paying off. For fund flow, again I'm paying off. In both the cases, when we are paying off a particular liability, so there's a rule, there's a difference between cash flow and fund flow. Cash is obsessed with cash. Money. They're just looking at, do we have notes? Do we have bank currency? Do you pay anything? Only that. And while fund flow is a little different, it also talks about payments and receipts, but it says if you have one thing as current and other thing as non-current, it's fine. When we are paying off a loan, one is a long-term loan and we are paying in cash. So aren't we considering it? For fund flow, there is only one rule. One of the elements should be non and one thing should be current. So one has to be non-current, the other has to be current, and that is how we can say that this is a movement of fund. In this case, this one point is non-current, one point is current. So in this case, the correct answer comes out to be, in both the cases, we are losing money. This is not a source of fund, this is application of fund. Now we are removing away all the money that we had got. Now comes the next point. If a company issues bonds to the public, how does it affect the cash flow and fund flow? If the company is issuing bonds to the public, bonds means they are raising their funds. That is what we mean by bonds now. When you are raising your fund, what is happening? You are getting inflow of cash. One thing is we have a positive cash flow because you are getting money. But at the same time, in terms of fund flow, one thing is current and one thing is non-current. Why? Because bonds are non-current. You don't pay bonds within a year. So it's a non-current thing. And how do people pay you? They pay you either in cash or in bank balance. That's the only way. So in this case, what would it be? It would be both positive cash flow and positive fund flow. These kind of questions helps you to find out the difference between cash flow versus fund flow. Cash flow is obsessed with the movement of cash. It talks about only cash and cash equivalents, cash, bank and marketable securities. Fund flow talks about what are the various sources of funds and where is the application of funds. You don't have to receive the money today, but even if you're receiving the money tomorrow, then I can consider it. Cash flow doesn't talk about it. Fund flow is way broader in terms of thinking about it. Then all the scheduled commercial banks are required to comply with Ind AS. Do you know? Banks do not follow the Companies Act exactly. While I would say banks have so many compliances. Let me give you a few. They have to follow RBI Act, right? They have to follow BRA, Banking Regulation Act, And since they're a banking company, a part of Companies Act is also applied on them. And at the same time, since banks are related to deducting TDS and all, they are also affected by Income Tax Act. People are working here, so they also have to follow Employee Provident Fund Act. People are working for more than 5 years, they have to look forward towards Gratuity Act. There are so many acts they have to follow. Okay, so these are not this is not an exclusive list. This is not the only thing that they have to follow. There are other aspects of the laws of our country that they have to follow as well. So among these, if we talk about Ind AS is applicable on corporate bodies, but it is not yet decided when this will be applicable on banks as well. Currently, it's not yet decided. Acha, and everyone, yaad rakhega, one thing that you have to remember, the AS are given by ICA, but Ind AS are not given by ICA. It is given by the Companies Act. Okay? It is actually issued by the Companies Act. Okay. Next question. The question says, which of the following statements about the journal and ledger is not correct? The term posting means transferring of debit and credit to the from the journal to the respective ledger. That is correct. The posting process is transferring something from journal to the ledger. The book of journal is a chronological order and ledger is an analytical record. That is also true. Journal records everything date-wise, while ledger doesn't record everything date-wise. It is going to follow the particular analysis that this is cash, take it to the cash. If this is bank, this is take it to the bank account. Journal is more reliable as compared to ledger. The ledger is the first book of entry. Ledger is not the first book of entry. One thing is clear. It is the secondary book entry. First of all, everything goes into journal. It's like the rough notebook we used to carry to the school. First of all, everything was written in that rough notebook and then we used to take it to the main notebook. Hai na? So it is never the book of first entry. It is the book of secondary entry. Not primary, but secondary. Done? Okay, here comes the next question, everyone. This relates to the area of journal. A firm has received advance rent from tenant in the month of April for the March. Acha nahi. For the month of April in March. This is what we can see. If in March I receive an advance, which of the following adjustments entries is correct while preparing the accounts for the year ending March? We have received an advance and credit rent received account. Debit rent payable and advance rent received account. Debit rent received account, credit bank account. Rent received account and credit bank advance rent received account. When you look at all these options, now trust me, if I had been working on my journal a lot. As a student, even I was doing that. Once I started teaching, I knew that this is the base. So personally, whenever I'm thinking about journal now, one thing somehow I made sure whenever I'm dealing with journal, I don't look at the options. This is so confusing. Even if I try to focus on it now, I fail to do it. That's one of the things that I am telling you directly. This is not the way I look at a question because this is so confusing. All I remember is I received something in advance. Advance means it's a burden. Arey yaar, I have received the money before time. This is not good for me. So that means that's a liability. One thing is for sure, advance received is a liability. Since I've received the money in advance and I was supposed to pay rent. Rent is right now what's happening. The rent is received. It was an income that has to be reduced. So I'll take it as rent income. This is an income. Income is being reduced and advance is being received, which is a burden on my head, and because I'll have to make sure I am acknowledging the fact because the person cannot be removed at least in the month of April. So I'll say rent to advance. This is rent received. So always remember this is the point of this payable point is just not working out. This is not the one. This is not the one. Then rent received to bank account. This is also not the one. Rent received to advance rent received. This is the one. See, this is the point I was telling you, that if you look at all these points and not think about the answer first, you'll end up being terribly confused. Not confused, but terribly confused. So it's way better when you're dealing with this particular question, then you debit the rent received account and credit the advance rent received. So simple and sorted. Always make the journal first and then look at the answer. Next question, everyone. Which of the following is correct? Operating profit is equal to net profit plus non-operating expenses minus non-operating income. Operating profit, not net profit plus non-operating expense plus non-operating income. This is again very confusing. Why to look at the options? Think about operating profit. Acha, we are looking at, they have given operating profit on this side now. What do you mean by operating profit, everyone? The money that I earn wholly solely from my business, not from anywhere else. This money is earned only from my business. That means if they are giving you net profit, which includes everything, my business is of selling pens. I make these digital pens and then sell them. Randomly, I made a good amount of money because my business started growing, and at one point of time, I made a super duper amount. I spent that money in the buildings. I bought another building. I gave it on rent. A good point, na? I've made another source of earning. If I'm making money from that FD wala area and I've made an FD and I'm also earning from the real estate, my business is giving me separate amount of money while this money is separate, and sometimes even I have to spend. You know, if I give the building on rent, I have to get the pay that area painted. I have to pay a certain amount of expenses. That is something the owner has to pay. Municipal taxes, XYZ, that is always on me. So in this case, why are we including it in the business? They are not business incomes. For example, if you ask me that what is your income, I said I made 40 lakhs this year. And then you start asking, Acha, you made 40 lakhs. So I thought your business is just going average. Make it nay. The point is my business made 20 lakhs. I earned 10 lakhs from one property that I had. I made 3 lakhs from the FDs that I've got, and then I made 7 lakh from another property. In this case, what will you say? I'm a good financial management person, but not a good businessman. I am earning money, but not from my business that much, but from the varied sources of income. So in this case, you will say, ma'am, 2 minutes. You are confusing me. I was interested in investing in your business. So let me know what is the investment in your business. I said 20 lakh. That is over. So net profit plus, why are we including non-operating expenses in it? It's a sin. ये पाप है. क्यों डाल रहे हैं उसके अंदर? This will deviate the person. This will give them a misunderstanding that the business is going super good. So we'll add up non-operating expenses and we'll reduce all the non-operating incomes that we have included. So in this case, the correct answer that will come up is plus non-operating expenses minus non-operating income. Again, I didn't look at the options. If I would have looked at the options first, then this would have created a lot of confusion in my mind, because these kind of questions, always look out for the exact answer. Solve it up first and then look at the exact answer. If that doesn't work out, only then look at the options. Otherwise, these options will definitely lead you to a confusing situation, because in the examination, anxiety level is not here, it is at this level. At that point of time, when you're just about to finish the particular examination, you are pressured a lot in terms of that examination performance is there. So that point of time, this will not work out. Okay? So it's way better that you think about the answer and then check it out. Acha. Now let's end the particular class here itself, everyone. I hope this mini marathon was helpful for you, right? And if we are looking forward to it, the very first thing that what you can do is you can take up our courses. How can you take it up? Just open the JIB and CIB area. Okay? So let me show you where to go. ठीक है, अब यहाँ पर let's go to the area of JIB and CIB. let's look at the JIB and CIB area. You have, if you want to go ahead and check it out, the best thing is you can look forward to the JIB Mahapack. One thing is JIB Mahapack. The JIB Mahapack includes a lot of things. Number one, JIB Mahapack includes your live classes. It includes your test series. It includes your ebooks. It includes videos. At this point of time, if you take it, you will not be eligible only for the current syllabus class, but also you'll get the revision class. All the ebooks are there, unit testing is there, you will get PDFs of each and every class attached with it itself. They are not, you can look forward to that as well. All the additional notes, even ebooks are there for you for your studies. The physical books are also launched, so you can look forward to those books as well for your better study there, because many people are comfortable with that. For example, I am someone who love to read from ebooks. If you're not someone, I find ebooks more handy, because whenever you're going to the office or you're going anywhere else, you're traveling, best thing is this phone. Open your phone, start reading. That's one of my perspectives, but I know sometimes even I like to underline. So if you are someone who belongs to the one who likes ebooks, ebooks are there. If you want to read the physical books, go ahead and check out the physical books as well. And what are we providing in Mahapack? You will get marathon, where you will get mini marathons, whatever that we are covering here, that would be covered in the syllabus as well. That means you'll get extra questions, because unit testing is also there, mock test and practice paper is also there. So you're getting all those things. Plus, we're also providing your you all a portion of the. Achha, let me just show you there. You have to go to the area of www.adda247.com. Once you reach this area, this is where all the features are given that I just stated. If you're looking forward to it, then try and take up the particular code of Prep 80. Okay, I hope it is visible right now. What you can do is you can take up the code Prep 80 and you can make 80% discount out of it, along with double validity. One thing is available at 3 months validity. Okay, if we look at the 3 months validity is for 4499.80. For 6 plus 6 months, you will get it for 6719. And 12 for, you will buy it for 12 months, you get 12 months free. You get it for 6 months, you get 6 months free. Those things are already available for you. And if you're looking forward to, I don't want to prepare only for JIB, but I'm also looking for CIB together. All the features of Mahapacks are available for you. Mahapack means bilingual, English medium, everything is open for you. What you need to do is, you need to go to the area of the particular website, go on to the area of buy now. In this case, you are not only buying JIB, you are also buying CIB. The total validity is for 12 to 12. 24 months validity with hardly 11,577. Less than 500 rupees per month. Less than the value that I might have to pay for Netflix if I am getting for the entire family, right? So in this case, if you're looking forward to it, then why not invest in this area? Because you're not only paying for JIB but also for your CIB. Along with that, we also have the courses which includes JIB, CIB, bank promotion, okay, or any certified course that you might be looking forward to. This is our area of officers Adda Mahapack. This includes JIB, CIB, bank promotion, and even the IIBF certificate. Okay, so this is what you can take up. If you're looking forward to it, go ahead and use the code PREP80 and take up these particular classes. Choose wisely. Think about what is your perspective and your requirement. On the basis of that, go ahead and check it out on our website or in our app for further details, everyone. Thank you. Hello everyone, welcome to Officer at 24/7. My name is Niharika Valia Bhatnagar and I am starting with the class of AFM, that is Accounting and Financial Management for Bankers, and this is the mini marathon. Okay, so what am I going to talk about today? Today I will be starting with the basics of the area of accounting. The first question talks about, so this is a particular, I think in this mini marathon we'll be covering widely module A along with parts of module B. I've covered both, that is numericals as well as the MCQs. So stay tuned and let me know. And if you like this particular session, please go ahead and share it to your peer group, as well as don't forget to like it. And if you haven't subscribed to our channel yet, you should do it as early as possible, because we are coming up with way more things when you're preparing for this examination, right? So let's move on. Okay. Sorry. Chale. What is the definition of accounting, everyone? What do you mean by the term accounting? the process of analyzing financial statements, the systematic recording, Valia Bhatnagar, and I am with you for the mini marathon of AFM, that is Accounting and Financial Management for Bankers. So today I'll be starting with another set of marathon for you in terms of the JIB November 2023 examination. As you know, the exam is approaching. You have a very limited time left. So by this time, you should be ready for everything, be it your revision modules, be it your the data that you'll be studying on the last day, the things that you'll be studying in the last week itself as well. So everything should be sorted by you by this point of time. And I hope you're doing it that way as well. So what are we dealing today? We're going to deal with the area of accounting and financial management for bankers, and we'll be talking about the MCQs. So the mini marathon today would include both, that is numericals as well as the area of theory. Plus this includes module A plus module B and some parts of module C as well. So we are progressing. The first, I think the first second marathons that I've taken, they included module A only. Then I included module A and module B. Now this time I'm having module A plus B plus module C. So let's move on. Here comes the first question. The first question says the net profit for the year is 15,000. I have got 15,000 rupees in my pocket, है and interest received in advance. This is the amount that I've received in advance in 2004, and 31st December 2004, 3,000. Cash from operations will be 16,000, 22,000, 13,000 and 15,000. We are looking forward towards cash flow from operations. That means we are looking at the value of these things. Now the point is, the value is 15,000. The value is, this is the net profit for the year. So whatever we received in advance, that belongs to the previous year, or the current year or future year, right? So anything that belongs to the previous years or the future years is not relevant for the current year. So in this case, what will we do? The closing, in this case, the correct answer will come out to be the 16,000 rupees. Basically, what I am receiving for the future year, what I am receiving today. So plus 3,000 minus whatever we received in the previous year for this year, that is 2,000. It comes out to be 16,000. How are they calculating? Whatever we have received for future years is received in this year. So cash flow statement talks about inflow and outflow during the year. And whatever we had in the previous year. Previous year I received in advance for this year. So whatever we had received previous year has to be reduced, and whatever we received this year has to be added. So in this case, the correct answer is 16,000. This is a question from cash flow statement, module B. And cash flow statement can be stated as something. In this case, we have operating, we have investing, and we have financing activity. It is defined as per Ind AS 7 and AS 3. The methods that we are using is, there are two methods. One is direct and one is indirect. The method which is used in case of cash flow statement is indirect method. Why indirect method? Because under indirect method, this is something which has been suggested by SEBI itself. So in this case, the correct answer is indirect method. Okay everyone, if you like this particular session, then please go ahead and share it with your peer group, and don't forget to like it, and along with that, subscribe to our channel, because now we are coming up with more marathons. And not only marathons everyone, we will be coming up with a mega marathon just before the examination as well. Okay everyone, here comes the next question. Just a moment, let me make it more clear to you. Done? Is it visible clearly now? Now the point is GSC Limited purchased a machinery for 10 lakh, issuing a check of rupees 2 lakh 50,000, 10% debentures. In cash flow statement, the transaction will be shown as we purchased the machinery of 10 lakh rupees, and this is inflow of an asset. There is nothing defined, cash and everything else is not defined. How are we paying? They said we paid through a check 2 lakh 50,000, debentures 7 lakh 50,000. There is no movement of money in case of 7 lakh 50. This is our debentures. And in terms of bank, it is 2 lakh 50. So in this case, the movement is only and only. We are investing somewhere. That means we are investing in an asset. So it would be a fixed asset where we are investing, and the value would be 2 lakh 50,000, an outflow because we are paying, and it is a part of investing activity. So it's a minus. So the correct answer would be it is an outflow as per investing activity. It is shown purchase of an asset is minus and sale of an asset is plus. Why? Because in this case it is outflow and in this case it's an inflow. Here comes the next question. Which of the transaction will not result in the flow of cash? Issue of equity shares 1 lakh, purchase of machinery share 1,75,000, redemption of 9% debentures 3,50,000, and cash deposited into the bank rupees 15,000. Always remember, if you are just changing the form of cash, that is not movement. If I had cash and I put it in the bank, how much difference will it make, everyone? Nothing, isn't it? Right? So what would be the correct answer? Which of the following will not result in cash? Equity share issue, we will get cash. Purchase of machinery, we will pay. Redemption of debentures, we are paying off again. Redemption means payment. This means payment. And then we have cash deposited into the bank. In this case, we had cash balance. Now it has become bank balance. Nothing else. So what's the correct answer in this case? We are just moving towards another form. So in this case, the correct answer is cash deposited in the bank, rupees 15,000. Done? Okay. Here comes the next question. When opening stock is 50,000, we are given the opening stock is 50,000. We have a closing stock of 60,000. And they've also given the COGS, everyone. COGS is equal to 2,20,000. What is your STR? In actual, now its names is ITR. After the revised schedule 6 has been turned, revised schedule 6 was there under Companies Act 1956. Once we turned to 2013, it became the schedule 3, under which our format of profit and loss account and balance sheet is given. So as per this, what would be the answer? The schedules were made in such a way that the stock was called inventory in this era. Okay? In this case, the ITR would be COGS divided by average stock. How do we calculate it? Our COGS would be 2,20,000. Average stock is 50 plus 60 divided by 2. Writing it here everyone. Average stock is equal to opening plus closing divided by 2. That would be 50. Oh. Visible everyone, since I'm doing all that part now. So it is 50 plus 60 divided by 2. The answer will come out to be 55,000. So it's going to be 55,000 and 22,000. 2,20,000. 2,20,000 divided by 55,000, giving us 4 times. The answer is 4 times. Done everyone? The answer is 4 times. And when we talk about this area, in the inventory turnover ratios, all the turnover ratios are always expressed in times. Next point, it talks about the area of if the stock turnover ratio is 6 times. Average stock is 8,000. Selling price is equal to 25% above cost. What is the amount of GP? If the ITR or STR is equal to 6 times and average stock is rupees 8,000 and selling price is 25% above cost. So let's find out the cost first. It is the formula would be ITR is equal to COGS divided by average stock. Okay? So in this case, it's going to be 6 is equal to COGS divided by the average stock is 8,000. So in this case, the average stock will give us the rise to COGS. We can find the cost of goods sold, which turns out to be 48,000 multiplied by 6. 8,000 multiplied by 6. It turns out to be 48,000. Then the next point is selling price is 25% above cost. What is our selling price? If 48,000 is your selling price, then is your COGS. Then 25% of it is your 48,000 into 25% is your GP. It turns out to be 12,000. The answer is 12,000. Everyone, have a look at it. This is rupees 12,000. Done everyone? This is ITR. This is unit number 3 or sorry, this is module number C. This is a question from module C overall. The answer is 12,000. Let's look at the next question now. In India, which of the following is prepared on the guidelines of AS3? Accounting Standard 3. Balance sheet, fund flow, cash flow, or consolidated financial statements. Consolidated balance sheet is basically a statement which records everything of the organization in terms of financial position. This tells us about financial position. Fund flow talks about the inflow or sources of funds and application of funds. Cash flow talks about inflow of cash, outflow of cash, and position of cash and cash equivalents. When we talk about consolidated financial statements, it is prepared when a company, holding company, invests their money in some other company, which they call subsidiary, and they are putting 51%. More than 51%, or you can say more than 50%, because if you have more than 50%, you have all the powers, है ना? So this will be consolidated financial statements, which is prepared for any company which has holding over other company in terms of the shareholding or voting power, both. So the cash flow statement is the answer, and we have just talked about it in the beginning only. It is prepared as per Ind AS 3, Ind AS 7, Indian Accounting Standard number 7, or AS 3. Acha, AS are, there is one difference there. AS are issued by ICI, Ind AS are issued by Companies Act. Okay, this is the point. AS issued by ICAI, Ind AS issued by Companies Act 2013. Okay, there's a difference there. Ultimately, the AS are prepared by ICI only. Ind AS are also prepared by ICI, but they're issued by Companies Act. Here comes the next question. What is the correct sequence of the following actions required for the preparation of the financial accounts? Trading, making adjustment, balance sheet, or profit and loss account? What is the sequence, everyone? Go ahead and answer. And don't forget to like the session, everyone, and please share it among your peers. Done? Chale. Now in this case, the first part is making adjustment entries. First of all, you have to make the adjustment entries, which is there in B and C. So A and D are out. Then you prepare your trading and profit and loss account. Trading account records the manufacturing portion. Profit and loss account records the expenses and incomes. And then the third part after this is balance sheet. Ultimately, the balance sheet is prepared, which is called the financial statements of an organization. So in this case, the correct answer would be C. This would be the sequence. Make adjustment entries, trading account, P&L, and then balance sheet. Done, everyone? Done? Chaliye then, let's move on and talk about it. Trading account is a nominal account. Profit and loss account is also a nominal account. Balance sheet is a statement. while making adjustment entries is journal. These are the things that we consider, and their exact natures are also defined here, right? Chaliye, let's move on to the next question. Which one of the following concepts is used as fund flow preparation of fund flow statements? Current assets, working capital, cash, or all financial resources? When you're looking forward to this now, which one of the following concepts is used as fund flow preparation? When we're looking forward to fund flow, that is, fund flow can be specified as movement of cash, it is there. So this is normally current assets minus current liabilities, which is called statement of working capital. They first of all make the statement of working capital, then after the statement they prepare something else. So that is the correct answer would be D, all financial resources. Window dressing is prohibited due to conservative convention, convention of disclosure, then convention of materiality, or area of books accounts. Window dressing is what, everyone? Window dressing is that when we look at the particular scenario, if I say that look at the particular window, everyone, from the window what you can see is beautiful curtains. Those curtains are beautiful, and whatever portion of the particular place you can see, it looks extremely pretty. It looks like as if it is something which is extremely beautiful, aesthetic look. The furniture is magnificent, the lights are bright. That is what you can see. Then you will say that this particular showroom would be very good. This is what you can see from the window. As soon as you enter, you realize only that window wala portion was made that way. In the other parts, it's all simple. What am I doing in this case? I am just misleading you, isn't it? I am showing you a picture that doesn't match with the reality. Now, when we talk about window dressing, it is that only. Window dressing can be specified as something in which we can say that we are looking at something where we are giving a false disclosure. While when we talk about convention of full disclosure, it says you need to tell everything to your shareholders. See, if I show you the wrong books of accounts, the books of accounts which are basically something which is exaggerated, the true beyond reality, I'm doing it so that you invest in my company, and once you invest the money in my company, I get really happy, and with your money I'll be doing something else, and then maybe I'll be involved in other fraud as well, you know. Because if I'm looking forward towards fraud, if I misled you, then maybe I'll mislead other people within the organization too. So in this case, ultimately the frauds will happen. So that is why they say you should tell everything to the shareholder. You should disclose all the major deals, who are the key managerial personals, what are we dealing with, everything to the shareholders. So that is convention of full disclosure. Then we have convention of materiality. This is also an important thing, that whatever is happening in the organization, whatever is super important has to be told. For example, if you're looking forward towards one particular project, on that day we are not looking at full disclosure. We are just looking at that project, not with the history of the organization or present things, anything of that sort. No, we are just looking at what is whatever is important or whatever is being asked, which is relevant. And then we have conservative convention. Conservative is basically anticipate the losses but not profits. Think about the losses, keep the money aside for it, but do not look at the profits. When we'll receive the profits, only then record, otherwise don't. Okay? So the correct answer is convention of disclosure. Next point, assertion and reasoning is given. Ratio analysis is one of the tools employed to know the financial health of the organization. Ratio analysis is not the only technique which is available. Under ratio analysis, there is no one specific technique. There are multiple techniques. है ना? So in this case, I would say first is correct. Ratio is basically a tool for financial statement analysis. And along with that, this is not the only technique. Other than this is cash flow, fund flow, Then we have the area of comparative financial statements, common size financial statements, trend analysis, ratio analysis. These are all a part of study of financial statement analysis of an organization. So in this case, A and R both are correct. So the correct answer is A. Okay, everyone, here comes the next question. Let's look at the next question now, everyone. Chali. Now let's look at the question. 5,000 spent on removal of a worn out part. Worn out part means, okay, there's a machine. It's now worn out. It's very old looking for the moment. And now we are looking forward to purchase a new part for that. Acha, everyone, is it written that with the new part we are making any differences? If we are having a new part, are they changing the portion? Is it increasing the capacity or is it decreasing the capacity? What is it doing? I don't think the capacity is changing. When I get my car for servicing, does it increase the capacity of the organization of the car? Or it's just oil change and dry cleaning? It's just oil change and dry cleaning of the car, basic cleaning and checking, है ना? The car average can increase after the servicing. Nothing else gonna happen. So in this case, the correct answer is revenue expenditure. Capital expenditure will increase the output of the thing. Revenue expenditure will not. And deferred revenue is you did something really big for the organization today, which is going to benefit tomorrow as well. That's why we call it postponement or deferred revenue expenditure. Expenditure for replacement of part is revenue expenditure in the given case. The trial balance of Meghna shows that the opening inventory of rupees 10,000, which will be debited to the trading account, credited to the trading account, deducted from closing inventory of the balance sheet, or allowed to the closing inventory of the balance sheet. Everyone, try this question. Acha, let me see if I can find a particular format for you. What would be the correct answer, everyone? When we look at this area, let me just explain that part. I think I forgot to add the format there, but let me explain. When in the trial balance is an opening inventory, always remember trial balance will never have the balance of closing inventory, right? It never has. Closing inventory is always a part of closing inventory is always a part of the financial statements. It's an adjustment entry which is made by the end of the year where we find out whether the particular things are helpful or not, whether it is for the books or not. All those things are noted. So in this case, what would be the answer? The answer would be opening inventory will be debited to trading account. Trading account, as I told you, it's a nominal account. What is the format of it? It's a T-shaped account. We have the debit side as well as the credit side. Call this debit, call this credit. This is to opening stock. By closing stock. Whatever there is, if we made some purchases, so it is to purchases. Here we will have by sales. All the incomes would be noted from the credit side and all the expenses would be noted on the debit side. Then to opening stock, to purchases, to direct expenses. All those expenses which are required to keep the manufacturing process going on is direct expenses. And to opening stock, purchases, direct expenses, and to, now this part would be to balance. No, this will be gross profit. If there's a profit, that means your income side should exceed the expense side. Otherwise, we will have gross loss. This is why it is called a nominal account, everyone. This account's balancing figure is always these things. Done? If you're noting down, then kindly note it down. If you're keeping a screenshot, then go ahead. Since this particular portion of account records the profit or the loss, this is why it is called a nominal account. It's a nominal account. The amount of calls in arrears is deducted from to arrive at. From where will it be deducted and where it will arrive at. So let me add the fill in the blanks there. Okay. So now this makes sense, everyone. It is issued capital, called up capital, issued capital, paid up, called up, paid up. The amount of calls in arrears is deducted from. Calls in arrears means we thought that these people will give us money, but they didn't. So what will be the amount? We called everybody, sir, your amount is due, sir, your amount is due. That is called up capital, you know. And to arrive at what people actually paid, we asked people to pay 100 rupees, they paid 80. So remaining 20 is still pending. Right or wrong? The remaining amount is still pending. You know? So when we look forward to it, we can find out what has been paid and what is still pending. So if it is like 100 minus the arrears is of 20, 80 is already paid. Now this was a positive way of looking at it. But when we look at it, out of 100, 20 isn't paid yet, but 80 has been paid. So in this case, this is issued capital and we have, and this is called up. This is actually called up. This is our called up capital, for the amount for which we have asked people to pay, and paid up means the amount which the people have paid to us. So calls in arrears is deducted from the called up capital to arrive at paid up. Okay? Now comes the next point. If a machinery is purchased for 1 lakh rupees, the asset would be recorded in the books of accounts at 1 lakh, even if its market value at the time of when it happens is 1 lakh 40. In case a year after the machinery value of the asset comes down to 90,000, it will ordinarily continue to be shown at 1 lakh and not at 90,000 due to we bought something for 1 lakh. At one point of time, everybody said the market value of this thing will increase. Pakka, you see it will increase. They said it will go up to 1 lakh 20,000. 1 lakh 40. There would be an appreciation of 1 lakh 40. He's on cloud 9. Array, I'll get 1 lakh 40 someday. And then they said, nahi, one other thing that can happen is it can go back to 90. How will you make it certain? Everyone? How will we make it certain that pakka this amount is going from our hands in any case? There is no specific way, isn't it? If we are trying to find that particular value, how are we going to find it? The best way to find it would be market value should not be noted. Everyone, if I start noting the market value of the things, na, pata hai what will happen? Everything will be recorded in such a way that till the time okay, so everything will be noted in such a way that the things are not going in terms of value which is changing every single day. Market value changes every single day. If I start recording the market value of the things, na, if I start recording the market value of my phone, it will change every single day. Why to do that? If you got something, record it at its book value. You want to note down the depreciation. But why anything else? You know, there is no fun of recording anything else. That is what they say. You recognize things at cost. I don't look at my house every single day and acha, the value of this house is this now. The value of this car is this now. The value of my phone is this. We don't talk about the value till the time we are not selling it. Why should we do it every single day in case of business? Are we going to sell it? No, we are not. So in this case, the correct answer would be cost concept. This says record things at cost. Don't try to change the value every single day. Okay? So the cost concept is the case. When we talk about the question there, realization concept says in how much till the time you don't receive the money, don't record. Present value concept talks about what is the value today. Why do we need to note it? There is no particular concept in accountancy. It's always historic in nature. Replacement concept is basically how much money will I have to shell out if I have to get that thing. So in this case, cost concept has been followed in the given case. Okay, next question. Mr. Radhe Mohan deposited a check on 28th of March 2023. Okay. He's got a particular check that he deposited on 28th of March. So there is plus 10,000 in terms of his cash book. He's like, array, I deposited a check, I deposited a check. But the check was collected on 4th of April. That means on 31st of March. When passbook was asked, passbook said, I don't have any clue, I'm really sorry. If the bank balance as per cash book on that day was 1 lakh. The balance as per cash book was this. What would be the balance as per passbook in this case? Everyone. I deposit money into the bank. I thought I've received 1 lakh. I've received 1 lakh. I'm getting happy about it. Passbook said I have no clue. What will I do? In this case, I'm trying to find whatever is the value of cash book. So cash book will work according to passbook in order to find what is the value of passbook. If passbook said I have no clue and I come back, I'll come back by 10,000. This will give me the value of these things in my passbook. Is it 1 lakh 10,000, 90, 1 lakh or none? It would be 90. ठीक है ना? This is bank reconciliation statement. It is 90,000. If the cost of goods sold is 1 lakh, sales is 1 lakh 25, closing inventory is 20,000, the GP will be 45,000, 5,000, then 25,000, or none of the three. Cost is given, sales is given. Find GP. It's very easy. Your profit is sales minus cost. If your sale is of 1,25,000, your cost was 1 lakh, your value is rupees 25,000. Simple. Profit is SP minus CP. Cost of goods sold is your cost. Sales is your selling price. So I've got the value. Okay? So in this case, this is the correct answer. The correct answer would be 25,000. The formula that we are using is cost of goods sold. Cost of goods sold can be specified as opening stock plus purchase plus direct expenses minus closing stock. So in this case, the correct answer will come out to be opening stock plus purchase plus direct expense minus closing stock. Okay? Next question. The accountant of Messrs. Mohan and Sons paid personal income tax of the proprietor amounting to 20,000. This income tax should be. See everyone, the organization paid income tax of the person, not of the business. That is something that relates to the person. That means it's a drawings. What does drawings do? Drawings reduces our capital. We have reduced it into cash. Where does the drawing go ultimately? Capital will have this. If we are adding another capital or additional capital, it would be written here. Additional capital is added and drawings is deducted. If I receive any interest on capital, it is added. Interest on drawings is deducted. So in this case, the correct answer is added to the, this is deducted from the capital. This will reduce the capital. Whenever we make any kind of drawings, this will always reduce our capital. Since the amount paid for the personal expenses of the proprietor, then this 10,000 will be treated as a drawings, and drawings are reduced from the capital. Acha, one more point everyone. Since I've discussed the entire formula, one thing is left. If the organization makes profit during the year, added. If there is a loss, deducted. That's the formula. To find out the closing capital. Done everyone? This is the answer. Writing it here again, opening capital, whatever it was in the beginning, plus additional capital minus drawings plus interest on capital minus interest on drawings plus profit or minus loss. We can have only one of these things. We cannot have both. We can either have profit or we can have a loss. Based upon this, Nidhi started her business with 45,000 rupees. She started with 45,000 rupees, everyone, where interest on drawings was 5,000. We just did it. That is, this amount is to be reduced because IOD reduces the capital. IOC increases interest on capital. These two things are given. Nidhi withdrew 14,000 during the year. She withdrew 14,000 during the year, and profit for the year was 15,000. Whatever she withdrew is drawings. Yeah, she hasn't added anything in the business this year. Interest on capital is done, interest on drawings is done. Then Nidhi withdrew for 14,000 and the profit is 15,000. So what would be your closing capital, everyone, based upon this? What would be her capital? 45 minus 5 makes 40. It turns out to be 43,000. The correct answer is 43,000. That's the answer. Okay, so this is where I end my session. I hope this session was helpful for you. And till now, if you haven't looked forward to our classes yet, then kindly go ahead and check out. We are just about to launch our revision batch. So the revision batch is around the corner. So it's way better that if you're looking forward to your preparation, then start with us. Start preparing through our revision batches. What you can do is go on to the area of our website, that is www.adda247.com. Clicking on this area, you will go onto the area of JIB and CIB. Then click on the area of JIB October 2023. Double validity is going on, everyone. That means at this point of time, if you are interested in buying JIB Mahapack 2.0, Mahapack 2.0 means every class is open for you. Bilingual, English medium, previous batch, current batch, then revision batch, MCQ, ebooks, test series, you name it, and everything is opened up for you. Okay. Then the next point is, if you're looking forward to the revision batches are also there. It has just started, everyone. That means if you're looking forward to it, this is our English medium batch. Bilingual is also there. We will be discussing 4,000 plus MCQs. So if you're looking forward to the MCQ batch, then you can take up the revision batch where we'll be covering the concepts on the basis of MCQs. So this is what we can take up, right? So these are the total. The test series is also out. If you're interested in buying the test series, you can use the code PREP15. For this, you can use the code EXAM80. If you look forward to it, revision batch, 214 mock test, 270 video lectures are attached with it. Okay, the current batch session is going on. The recordings of all the classes are there. Live classes are also going on, so you can review the live classes. 200 plus interactive live classes would be there, and ebooks are also available. And everyone, our physical book of AFM has been launched as well. If you're looking forward to it, then kindly check it out on our website. The physical books are now available. So these are the books, everyone. JIIB Accounting and Financial Management is out. Then JIB Indian Economy and Indian Financial System is also out. And this is what you can look forward to. So if you are thinking about it, then kindly go ahead and check it out on our website or on our app for your preparation. So kindly check it out and hurry up, everyone. The time is ticking away. It's very important that we look forward to our exam in a focused manner. Thank you. Okay, so then when we look forward towards the chapter of ratios, ratios is what? Ratios is basically relationship of one thing with the other thing, right? One particular thing, relationship with the other particular numerical part. Okay, starting with the first question. A few of the questions today are discussed from the IIPF book itself. As I've told you earlier as well, that I am covering the questions completely from the IIPF book plus additional questions, past year questions, and the questions which have been asked in different examinations from this chapter. Right? So since this is a part of different examinations as well. So overall, what am I covering? If I look forward towards the particular preparation, I am covering IIBF book, I am covering the JIB previous year questions, I am covering the questions which are important and which can come in the examination. As well as my focus is towards understanding the conceptual area. That means if you understand the concept, then you will never be scared what kind of question you are going to have, because you are not focusing on the question, you are focusing on the concept. Right? So here comes the first question, everyone. First of all, they talk about accounting ratios helps in. What does the accounting ratio help in, everyone? What's the basic purpose of accounting ratios? The basic purpose of accounting ratios is that it is a part of the interfirm comparison. It is basically intrafirm or comparison within the industry norms or all of the above. When we talk about accounting ratios is something which includes everything. That means it includes all of these. It allows interfirm comparison, that is comparison within the firm. Then intra means within two firms you can compare, and it also helps you to compare with the industry norms as well. So it is completely covering all of these together, right? Okay. Next question. DSCR, that is called debt service coverage ratio. In which of the following is used in which of the following? Judging the margin of safety available, that is the default in repaying the loan. Judging whether the firm has borrowing disproportionate to its net worth. Judging the capacity of the firm to service the interest on debt, or all of the above. Debt service coverage ratio is basically covered under the solvency ratios. This particular ratio is related to the area whether this is actually a very judgmental ratio. As I told you, the entire these are basically interest coverage ratio, debt service coverage ratio. These are covered under solvency only. But see, these ratios are so judgmental that whether you can pay back or not, is it worth it to give you money or not, they talk about this. So in this case, what's going to be the correct answer? In this case, we are looking forward towards the fact whether the margin of safety available before there is default in repaying the loan. We would like to know what is the amount that they have and what is the permanent amount they will have to pay. That is fixed amount they will have to pay every year if they take a loan. Next point, everyone. Which one of the following is true? Among the following, which one is true, everyone? I hope it is visible now. Go ahead and answer. It says both EPS and price earnings ratio vary with the stock market. While calculating debt equity ratio, fixed deposits from shareholders are taken as a part of debt. While calculating quick ratio, all current liabilities are not taken into account. Debtor turnover ratio is higher if the company sells more goods on credit basis than on cash basis. What would be the answer? So what would be the answer in this case, everyone? Let's look at it. Both EPS and PE ratio vary with stock market. Yeah, they are market price. They are based upon. They are called market test ratios. But EPS is not based upon the market. PE ratio is based upon the market. Now the next point is fixed deposits taken while calculating debt equity ratio. Debt equity would simply mean that it includes debt That is long-term debt, and equity, which is a form of the money which is given by the shareholder himself. But fixed deposits from the shareholders, that means they have given a kind of loan to the organization. Fixed deposits means long-term, more than 1 year. It should be taken as a part of debt. Yes, this one's true. While calculating quick ratio, all current liabilities are not taken. It is taken into account. This is wrong. Debtor turnover ratio is higher if the company sells more goods than on cash basis. No. There's only one correct. As debt upon equity can be stated as this is the long-term debt and this is the owner's capital. This includes owner's funds. Owner's funds, that includes equity plus preference plus reserves and surplus. Okay? Which one of the following is true? Higher debt equity ratio increases the profit margin. Debt equity ratio is an indicator of solvency. A high current ratio is always an indicator of efficient management. Depreciation is not an expense, should be excluded while calculating profitability ratio. Depreciation is a very strong expense. This is how people had been looking forward towards the tax planning. This is wrong. This one's completely wrong. High current ratio is an indicator of efficient management. No. High current ratio means you're keeping so much funds liquid. Why are we keeping so much funds? So much amount of funds liquid. What's the benefit? What would I do by keeping 10,000, 12,000 in my pocket every single day? If my business requirements is barely 2 to 3,000 max. If I'm keeping a lot of money in my liquid area, I could have invested this money into RDs, FDs, or even in, if I save a lot and then I put it in the real estate. The organizations have been doing this. They've been putting it into mutual funds, real estates, even the infrastructure investments. That is way better. What are they doing by keeping it in their hands? This is not a good point. Debt equity ratio is an indicator of solvency. This is true. It's a part of solvency, and that too long term, not short term. So we have got the answer. Then comes higher debt equity ratio increases the profit margin. No, higher debt equity means we have taken way too much of debt. More debt means our interest rate would be more. If interest expenses more, our profit would be less. Because if expenses increases, our profit falls. So it is B. Next point. Which one of the following statements is correct about fixed asset ratio? What's true, everyone? It is a ratio of fixed assets upon net worth, fixed assets upon long term. A ratio less than 1 indicates that short-term resources have been diverted for fixed assets, or none of the above. There is only one thing correct, that is fixed assets is divided by long-term funds. Fixed asset ratio. Okay? This is FA upon long-term funds, or I can say the total capital employed. Next point. No, this is only for long-term funds only. Overall, the long-term funds. Net worth is basically your equity share capital plus preference share capital plus reserves. Next ratio. Current ratio is liquid assets upon current, fixed assets upon current, current upon current liabilities, and liquid assets upon current liabilities. What would be the correct answer, everyone? Current assets is CA upon CL, which is expressed in the form of ratio. The ideal debt equity ratio is 2:1. In terms of books, it is 2:1. In practical life, it is 1.33:1. If you have if you have to pay 1 rupee, you should keep it max 1.33, not more than that. The answer is current assets upon current liabilities. So this is current ratio. If I'm looking for quick ratio, it is going to be quick assets upon current liabilities, where quick assets is current assets minus inventory minus prepaid expenses. Done? Done, everyone? I hope you're noting down. One particular secret of this particular topic is that you note down all the important information, because what happens is people do not note down the formulas in terms of ratios, and they think that we can learn it that way. Overall, you will have to learn it. Without learning it, you cannot uh, solve the questions, and to learn it, you will have to jot down all the formulas. Okay? That's one of the secret of this particular chapter. Here comes the first question, that is a numerical based question. Cash balance is given, trade balance is given, then we are given with inventory, then we are given with trade payables and bank OD along with current ratio. You have to find the current ratio there. For current ratio, it is going to be CA upon CL. Our current assets are 15,000 of cash balance. Trade receivables are of 35,000. Inventory is of 40,000. That's it. Why? Because trade payable is given. The money which I owe to someone else, that would be divided. That is 24,000 plus 6,000. What would be the answer, everyone? Sorry. It's gonna be 90,000 divided by 30. This turns out to be 3:1. The current ratio is specified in absolute ratio form. So 3:1 is the absolute ratio form. Done? It is 3:1. Next question. This is a measure of liquidity which excludes generally the least liquid asset. Current ratio, account receivable. Liquid ratio, account receivable. Current ratio, inventory. Liquid ratio, inventory. What is the measure of liquidity which excludes generally the least liquid assets? That is liquid ratio. But liquid ratio records accounts receivable because we can pressurize the debtor. No, you need to give me money right away. Bill receivable can be pressurized, debtors can be pressurized, but you cannot pressurize and sell off your entire inventory, even if you try very hard, right? Until or unless you go on a loss, you will not be able to sell these things. So liquid ratio, inventory. So in this case, the correct answer is liquid ratio, inventory. Liquid ratio or liquid assets do not include, from the current asset you have to remove inventory, as well as the, what was the second point, everyone? It was prepaid expenses. Done? On the basis of the following data, the cost of revenue from operations by the company will be opening inventory. Opening is given 70,000. Closing is given 80. Closing is given 80. So what is the average, everyone? 70 plus 80 divided by 2 will give us 75,000. This is my average. So now if I use the formula, I'm writing it here, everyone. ITR is equal to COGS divided by average stock. This is 6 is equal to COGS divided by 75,000. That gives me COGS is equal to 75,000 multiplied by 6. It gives me rupees 4,50,000. Done, everyone? So this would be the answer. Okay, now moving on to the next question, that is 4,50,000. How do we use it? This is called inventory turnover ratio. Inventory turnover ratio can be specified as COGS, that is cost of goods sold, divided by average stock, where the formula for average stock is opening stock plus closing stock divided by 2. This is the formula that we use. By using this formula, we are taking up the COGS as well as the average stock. What is the formula for average COGS, everyone? This is the cost of the goods that are sold in the market. Opening stock plus purchase plus direct expenses minus closing stock. Done? Okay. These are the formulas that I've used. In this case, they had given with ITR and they had given the average stock. So we could multiply and find the value. But today my class is totally related to one specific module. Which is it? Today the class is exclusively linked with the area of module D. Under module D, what do we cover? Under module D, we cover the topics of direct tax. Direct tax is your income tax. It covers the area of indirect tax. Along with this, it also covers the area of the costing. So we'll be covering with all these areas in our classes. In this specific session, it's going to be I would say a cluster of questions from all these areas covering the entire module D. So today I'm going to talk about both the numerical part as well as the theory part. Though in the last examination, the questions were more or less towards the area of the theoretical part, but you never know what are they going to do this year, because every year they are coming up with something new, right? Especially with this particular attempt, now things can definitely go ahead and change. So let's start with it, everyone. Here comes the first question. Which of the following is a characteristic of process cost accounting system? Process costing is what? Process costing is basically you have a raw material and you try to reach towards the area of finished goods, है ना? So you are moving from raw material to finished goods, and from raw material you have to go through multiple processes. That is how you reach to the area of finished goods. So in this area, what are the characteristics? They have material, they have labor, they have overhead. Companies use the system if the process custom orders, or opening and closing stock of work in progress are related in terms of completed units. Only closing stock of work in progress is restated in terms of completed units. Material, labor and overheads is there in almost all costing. It is there in every organization. These three things, material, labor and overheads, when they are all direct, we call them prime cost. Together they are called prime cost. And if material, labor and overhead are indirect, then we call them overheads. So this is how we take it up. So companies use the system if they process custom orders. No, this is there in terms of job costing. Okay? This is a question of job costing. So in this case, I would go with answer number C. That is opening and closing stock of WIP. We have something that we are making that is in progress, and then we try to complete the units, or we also call it finished goods. Done, everyone? Acha, the next question. When the sales increase from 40,000 to 60,000. Okay, it has increased from 40,000 to 60,000. The profit increases by 5,000. What is the PV ratio in this case? The PV ratio would be change in profit upon change in sales here. If we talk about the profit has been plus 5,000 and the increase in sales has been plus 20,000. So that makes a total of what amount? What would be the amount according to this? It goes up to the area of 25%. PV ratio, if given, it is actually contribution upon sales. But if we are given the area of, sorry, this is PV now, profit volume ratio. This is profit volume, then it is contribute upon sales, or otherwise if we take it, change in profit upon change in sales. It goes like this. Okay, per unit is this. But if multiple years are given, then we can take up change in contribution or change in profit, whatever is given, and divide it by sales. Next question. State which of the following are the characteristics of service costing? High level of indirect costs as proportion to total cost, use of composite cost units, use of equivalent units, 1, 1 and 2, 2, 2 and 3. What would be the correct answer? We're talking about service costing, also called operating costing, because we are working now. So it's going to be operating costing or service costing. High levels of indirect costs are there because in this case there is no direct cost. If I'm providing a service, then there would never be a direct cost. That can never be related to a good or something. It is always related to the area of this, that is in terms of the services it can be linked, right? So the next point that comes here is use of composite cost units. They are equivalent. Actually, there's one problem. In terms of services, it can be one thing can be in hours, other thing cannot be in hours. There can be multiple things going on, but it can never be always equivalent units. Some things can be in kgs that we are using, something can be in units, it can be in number, something can be in absolute ratios, whatever the ratio may be. But they are not always equivalent. So in this case, it is 1 and 2 only. Next question, everyone. Depreciation is an expense of, though depreciation is something that we study in the module A there, but this is also linked with this area as well. Fixed cost, variable cost, semi-variable or marginal. Acha, do you know the other name of marginal costing is variable costing? Marginal cost or variable cost are same to an extent. Marginal cost comes out to be a specific study altogether in terms of variable costing there. Well, variable cost means which varies with the number of units that we are consuming. Okay, so for example, I am consuming a specific cold drink. So if the number of units that I'm consuming increases, then it will also increase further. Done, everyone? Okay, now let's move on. In this area, what would be the answer? Depreciation is an example of fixed cost, variable cost, semi-variable. Depreciation is an example of fixed cost. It will happen every year. While it is also a non-cash expense if I'm looking at module A. From that point of view, it is a non-cash expense. If my calci, I'm using my calci every single day, the value of my calci is decreasing every single day. So the decrease in the value, I'm not paying it to anyone. So it's a non-cash expense for me. Right? So it would be called a fixed cost. Now, when we talk about depreciation, depreciation is what? The usage, the wear and tear of our goods. Hai na? So, sorry, of our assets. That is there in terms of accounts that we have done this part. So, when we talk about this area of accounting, in terms of costing, how do we define it? It can be defined as something where we are talking about the valuation of the organization's assets, and that is something that we should note down as per the current scenario. If I bought it for 10 lakh, but I'm using it every single day, the value is declining every single day, isn't it? So this can be stated as something like this. Okay, I hope it is now visible. The cost is spread out over the estimated useful life. So with every single year passing by, we are recording it into the books of accounts there. Got the point, everyone? This topic is covered not only in the area of the module A, but is also a concept which is covered in this particular topic as well. Okay, now shall we move on? Now comes the next question, everyone. The next question says that the budget is prepared first of all. is master budget, budget with key factor, cash budget, or capital expenditure budget. When we talk about the era of the budget in terms of the budget that is prepared first of all, which is the budget that is prepared in the very beginning. First of all, whenever we are starting, we are always looking at the sales that we can make. So in this case, the first thing is based upon our sales. Okay. The second thing that we define it upon is, that is, then after we know the sales value, then we would like to know the purchase price of it as well. Na? So that means if I sell that, if I can sell up to 10,000 units. So out of those 10,000 units, that is something I'll sell. My opening stock was already of 2,000. So I have to produce the remaining 8,000. So in this case, can you say you just have to go backwards? You have to go backwards. You know? So in this case, this would be the production budget. Based upon this, we were making this production budget and then we realized, oh, first of all, check out the plant utilization as well. Labor that we are using as well. That can be a problem, na? So in this case, it is budget with key factor. Key factor is the bottleneck activity, which is the limiting factor, which doesn't allow us to work with the maximum capacity. It is limiting us. To a great extent, it is limiting us. Okay? Done? So in this case, it is the budget with the key factor. Next question. Okay, so here comes the question. For the purpose of proof, material cost variance is equal to material usage variance, material mix variance, material price variance plus material usage. This is basically what would be your MCV. What's MCV, everyone? Material cost variance, the cost that we are incurring when we are using things in our business. So what would be the value? MCV, Material cost variance is equal to material price variance plus usage, price plus yield, mix plus yield. What would it be? Apologies. Let's continue further when we talk about the material cost variance, which is MCV. It talks about the cost. है ना? This says that what would be the cost. So in terms of cost, how do you find cost first? It is basically your standard quantity into your standard price minus actual quantity into actual price. That's how we find our material cost variance. So what is the formula that we'll be using in terms of material cost variance altogether? This is a cluster of MPV, that is price variance, as well as it is MPV plus MUV, that is material price variance plus material usage variance. So can I say that cost variance is equal to MCV is equal to MPV plus MUV? In today's class, or maybe in the marathon, I'll be covering the particular question regarding the formula for this. If I think maybe in this class only we'll be able to cover it. If not, then you will find it tomorrow at 6 p.m. Kindly be there. I'll be starting with my mega marathon. It's going to have a lot of questions for your examination. So kindly be there at exact 6 p.m. everyone. Acha, this is the formula. MPV plus MUV. Okay, acha, this is covered here only. So let me give you a view about this. Can you see this, everyone? Okay. First of all, let's talk about this. Material cost variance is equal to MCV. Standard cost minus actual cost. Material price variance is what? MPV is standard price minus actual price, and there outside we have actual quantity. Then we have material usage variance. How much of it is being used? That is MUV. Okay. Keeping it switched off for the moment. It is standard quantity minus actual quantity into standard price. Okay, you can keep a screenshot of this, or you can look out for my Telegram channel. There you will be able to find all these things. JAIIB 2023 Niharika ma'am, you'll be able to find this particular topic there itself. Okay, so this is the particular topic. Just have a look at MCV, MPV and MUV. In the examination, they can ask you the formulas in terms of standard costing. This is one of the toughest costing chapters, I would say. Chaliye, done everyone? Now let's move on. Okay, here comes the question. The PV ratio will increase if, how will the PV ratio, that is contribution upon sales, that is contri, we call it contri, but exactly what do you mean by contri? This is sales minus only the variable cost. We are not reducing the fixed cost. So you get contribution. When you remove fixed cost, what is left? In this case, I'm writing it here. Sales minus variable cost is equal to contribution, and minus the fixed cost will give us profit. Done, everyone? There is an decrease in fixed cost, there is an increase in fixed cost. Then there's a decrease in selling price, there's a decrease in variable cost. What happens in terms of PV ratio, everyone? In terms of PV ratio, there's a decrease in fixed cost, there is an increase in fixed cost. See, in this case, if the numerator increases, then the particular PV ratio will increase. है ना? So if there is a fall in variable cost, my contribution will go up. If it was 100, it has now become 200. The sales, if remains the same, for example, the sales is of rupees 400. So here it was 25% and then it would become 50% here. So I think I'll go with this. Why? If this variable cost is falling, my contribution will go up. If my contribution will go up, my value will go up of PV ratio. There is a decrease in the variable cost. One of the best ways to learn these formulas is not to cram them, because cramming these formulas has a very short-lived life. If you remember these formulas by heart, then there won't be a problem there. Acha, in the process costing, a joint product is. Acha, what do you mean by joint product? है ना? If I am making something, for example, I decided to, I bought some crude oil and I want, I'm looking forward towards diesel. But from the crude oil, we also get petrol, we also get LPG. So once we are refining it, one thing goes first, then the second, then the third, based upon the density. So in this case, till a certain level, they are all being refined at once. And then whatever comes out first will leave. You know? That is something which we can define as joint cost. And when we talk about joint costing, what happens is after the split of points, their costing can be defined separately. But before that particular thing is, that is a joint cost. Okay. Now, based upon this, try to answer. A product which is later divided into many parts, a product which is produced simultaneously with other products and is of a similar value, at least one of the other products, a product which is produced simultaneously, they are produced simultaneously, and which is of greater value. Petrol and diesel, there might be hardly, abhi to difference has come again, otherwise there was a point of time, one of them was costlier a little and the other one wasn't, but none of those things were invaluable. ऐसा नहीं था that one particular thing was very costly, the other thing wasn't, है ना? A product produced jointly with another organization. So when we talk about process costing, how can we define it? It is basically a product which is produced simultaneously. They are produced over a period of time and with other products and is of a similar value to at least one of the other products. See, one of the point is their valuation might be similar. One can be upper, one can be lower, but not a major difference is there. For example, if I talk about sugarcane and we get the fiber thing left, which is called bagasse. So what happens is it is just a mere waste, while sugarcane juice is valuable. So can I say that in that case, one thing is called byproduct? Indeed, one of them is a byproduct. In this case, it's not. Both of these things are equally important. Petrol, diesel, LPG, they are all equally important. So can I say in terms of the byproduct scenario that the value of the products almost remains the same, are at least similar. I wouldn't say same, but yeah, it may be similar. But in the other case, byproduct, one will be having a higher value, the other one will be having a lower one. Now comes the next point, everyone. Cash budget of ABC Limited, 4 warrants of short-term surplus. Which of the following would be appropriate action to be taken in such situation? Purchase new fixed assets, repay long-term loans, write off preliminary expenses, or pay off creditors to obtain cash discount. It's a short-term surplus. They are saying that there would be a surplus. What will we do? I don't think if I get a lot of money in short term, I'll be using it for some long-term thing. Isn't it too scary that whatever is there in terms of the business, which is some short-term finance, we're using it from some long-term finance? So what will it be? Purchase new fixed assets, repay long-term loans, repay write off preliminary expenses. None of these things is a better idea. It's better to use short-term funds for something short-term. That is, pay the creditors early to obtain a cash discount. Because we'll try to get a discount by paying off our creditors first. Creditors are those people to whom we owe money. I am supposed to pay money to my creditor. Then the difference between hours paid and hours worked is called labor rate variance, labor efficiency variance, idle time variance, or net efficiency variance. What would it be? The difference between hours paid and hours worked. The difference between the two will be called the labor idle time variance. Because for certain time the people aren't working and we have to pay for that as well. For example, the break period, the break that we are giving, sometimes it gets extended because of some internal reasons as well. Not only sometimes, for example, if the plant machinery are down, at that point of time we cannot make them work, but we'll have to pay them because they turned up for the office that day, na? So in this case their salary will still be paid for that particular day. Done. Dash is a detailed budget of cash receipts and cash expenditure, incorporating both revenue and capital items. Cash budget, capital expenditure budget, sales budget, or overhead budget. Dash is a detailed budget. This is a detailed budget in which we are recording the cash receipts and cash payments, both revenue and capital. They are not worried about revenue and capital. They are moving towards only receiving cash and paying cash. If they are worried about only these two things, then what will it be called? Then in this case, the answer would be the cash budget. Okay? Next point, which of the following statements is or are correct? A material requisition note, that is a request that is made for direct material to be used, is to record the issue of direct material to a specific job. A typical job cost will contain actual cost for material, labor, and production. Job costing is highly customized. I'll be doing something specifically for you. That is covered here, and non-production overheads are often added as percentage of total production cost. Pluses, job costing method can be applied in costing batches. 1, 1 and 2, 1 and 3, or 2 and 3. What would be the answer according to this? That would be 1 and 3. That means that is 2 is not correct, but because job costing is based upon customization there, right? So total production cost is different. What we do is basically we issue a job card specifying the job that we are doing, giving it a specific number, and then explaining it in that particular thing. That means job card will have all the details regarding material cost, labor cost, and overhead. So all these things would be stated for the prime cost, and then it's a kind of mini cost sheet specifically for that particular job that is to be covered here. So then this is highly customized. Done, everyone? The term cost refers to what? The present value of the future benefits, the value of the sacrifice made to acquire goods or services. Then we have the area of the assets that have been given benefit but now expired, and the price of the product sold or the services rendered. The cost is what? See, if I'm buying a good or I'm buying a service, I have to make a certain payment for it, na? If I have to pay certain amount to acquire that particular thing, that is called this. The value of sacrifice made to acquire goods or services. The value of sacrifice made to acquire goods or services. The term cost refers to the value of sacrifice made to acquire goods or service. Then, okay. The price of the product sold or service rendered. In accounting, this is covered in terms of monetary value of raw material, finished goods, labor, products, equipments, everything would be covered here. Acha everyone, what do you mean by margin of safety? Margin of safety can be defined in such a way that first of all we have our break-even point. The point at which our value becomes equal. That means break-even point means if I have invested rupees 10, I get rupees 10 back. That is break-even point. At what point of time I'll recover the entire money? That is break-even point. After the break-even point, whatever you receive, that is your profit, which is called margin of safety. For example, if I'm making a graph, then this is the cost and this is your revenue. In terms of variable cost, it will start from 0. And even your revenue. Achha everyone, this is variable cost. Now, the fixed cost will always be there, even when the organization didn't exist. So that means, can I say my fixed cost will be here? Based upon this fixed cost value, can I say this will be my total cost, adding up both? Then we have to find our total revenue as well. When we are trying to find total revenue will always start from here. Now the point at which the cost and the revenue meets, this is called break-even point. When whatever we had invested in terms of costing is all recovered. If this angle is bigger, this means you have more profit in future. If this is smaller, then it would be like that. This is margin of safety. Oh, this is margin of safety. I was thinking about the question there. I just showed you the answers. But before that, let's do the question properly. Done, everyone? Now, solving the question towards your right side. For the given product, the selling price is 15. So the question has to be completed. The variable cost is rupees 10. It is rupees 10. And how many units are we selling? Units sold is 35,000. You know? One more thing, I'm adding it up. Fixed cost. Rupees 1,50,000. In this case, the question will be easily understood. This is one of the areas where you have MCQs in this particular conceptual area. Now, got the question everyone? What would be the answer for this question? First is you have to write sales minus variable cost. Selling price is 15 minus the variable cost which is 10. The amount that comes out into your hand is 5. Number of units sold is 35 into 5. The total amount turns out to be 1,75,000 is our total income right now. And out of that, we are giving 1,50,000 to the people there in terms of fixed cost. That means we are left with 25,000. Now, is this the margin of safety, everyone? In terms of margin of safety, it means the particular amount of goods when we started selling gave us the profit. Okay? Done, everyone? Chaliye. Now, let's find it out. If your profit comes out to be 25,000, the value for the margin of safety would be profit upon sales. It would be profit upon PV. I wrote the wrong answer. It is actually profit upon PV. Profit upon PV means PV is present value. Then the profit volume ratio. Then how do we find this ratio? That is your contribution upon sales. First of all, find the contribution. Okay, let's discuss the answer directly, everyone. That will make it easier for us. Look at this. First of all, we have made a sales and variable cost, and the contribution comes out to be 5. And we reduce the fixed cost out of it. What we get is profit of 25,000. Then PV ratio, that is contribution upon sales multiplied by 100. This particular ratio states about this. So that means, can we say, first of all, find the contribution and divide it by sales? The PV ratio in this case came out to be 33.33. That means this is our profit other than the fixed part, right? The fixed assets of the organization. And then when we look at the MOS in value, it would be basically whatever your profit is, whatever your policies would turn out to be, whatever your amount turns out to be, that is your profit. From that profit, they will find the PV ratio. Done, everyone? Then MOS can be defined as, what was the ultimate profit? 25,000. I told you it's very important. Divided by whatever your PV ratio was. So in this case, what would be the answer? It would be 75,000 all in all. Next question, everyone. From the manufacturing concern or a manufacturing company, which of the following is an example of period cost rather than product cost? Period cost is based upon annual years, paid to be paid annually. While product cost is based upon specifically a particular product, wearing apparels, then bottles, then packaging material, all those things are involved. So what would happen in this case? We can find it out like depreciation on factory equipment, commission to salesman, wages and machine operator, or insurance on factory equipment. For the manufacturing company, which of the following is an example of period cost rather than the product cost? Period is over the period of time, you know, and rest, I think there are many things that I can directly assign towards the area of towards this area when we talk about the answer there. Depreciation is for a long period there, right? But this is sometimes this can be allocated to the machinery in which that particular asset is used. Commission to the salesman, it can also be related to one particular product. Wages of a machine is also for the same. Insurance of factory equipment, it is done on annual basis, not as per the product cost. There's nothing to do with cost there. But this is factory equipment. Whenever we buy a specific equipment, it is always based upon the asset of that particular asset there. Depreciation is what is being charged there. What is the closing value? Based upon that, you will be able to find out your valuation. Right? And normally it comes out to be lower even in terms of the banking and other industries. What they do is they're always looking forward to paying less. Insurance is something which as banking sector has involved, and there are many insurance based organizations as well. So it has become very difficult to trick them. So ultimately you will have to pay the insurance in time so that you can avail the benefit next year as well. Done everyone? Acha, what would it be? Estimated wages for January is 4,000. February is 4,400. If the delay in payment of wages is half month, the number of wages to be considered in the cash budget for the month will be, what would be it? 4,000, 4,400, 46 or 42? Okay, in January, we might have to pay 4,000. Okay, in this case, the estimated wages are of 4,000 for Jan, and for February, it is also 4,000. 4,400 actually. When we talk about February, it turns out to be 4,400. That means in this particular year of January, we made at least a profit of 400. Profit too, that too in terms of cash. If the delay in payment of half a month as wages is given, half a month means this 4,000 gone, 2,000 given here, and 2,000 I'll give it to someone else. Then the someone else has to be showed as well. So in this case, whenever we have cash now, we try to accumulate it. You just have to specify at what place we're using it. The number of wages to be considered in cash was for the month of the budget of family. It's 4,000, 4,400, 4,600 or 4,200. Answer is 4,200. For the first year, Jan payments were of 2,000. Remaining was still to be paid. In terms of the second one, February, then 2,000 was for January. Now which is recovered, and when we talk about 2,200, then this 2,200 will be recovered or basically paid back in terms of 2,200. Right? Done everyone? Any doubts still here? Done everyone? Look at the specific question. Chaliye, moving on. This question is regarding GST. Which one of the following statements is not correct? GST is aimed at broadening the tax base and also at a better tax compliance. GST is charged only on the component of value addition in every stage. GST has resulted in doing more business more difficult. And then GST ensures that IDT rates and structure are uniform in the country. What is true and what is false, everyone? What will be the value, everyone, in terms of GST? GST is goods and service tax, which was introduced on 1st of July 2017, है ना? So which one's wrong? GST has resulted in doing more business. As per GST, it has made things easier. But if you go to the practicality of the situation, GST has made things more difficult in terms of uniformity, in terms of compliance. Most of the clients are either sitting in the CA's office to finish off their books of accounts, or going to the area of GST, getting their returns done in time, because otherwise they will lose the input tax credit from the person from whom they want to buy those things. So this happens. So this has definitely resulted, but that is there only in terms of understanding, not in terms of writing. So we still say that nahi, it has made things easier. So GST has resulted in doing business more difficult. Okay? So in this case, GST has resulted in doing business more difficult. Next question, everyone. Which one of the following erstwhile taxes have been replaced by GST? Sales tax, excise duty, service tax, or the last one? All of the above. Which of the following erstwhile taxes can have been replaced? When we talk about GST now, GST became the bigger law which follows all the other laws, which has included all the laws. Service tax is included in. Only customs is left, or almost everything has been included. Excise duty has ended. Then service tax has ended. Then there are other different taxes which were subsumed. That includes the era of this service tax. Sales tax was there in terms of center. That is called central sales tax. All the organizations which were smaller and existed in a smaller unit there, they used to have VAT. Done. So this has replaced all of the above. Done, everyone? Next point. What do you mean by HSN code? In terms of GST, now to lay the taxation of GST, they want to first of all classify what that particular thing is. And if they are similar, then they will have to pay tax there. If it is not, then it depends upon the particular area. So HSN code is basically harmonized. Oh, sorry. Let's look at it. It is basically high-speed network or harmonized system of nomenclature, heavy sales notification, or Haryana sales network. Done, everyone? So in this case, what would be the answer? That would be harmonized system of nomenclature. They define a particular rate, and sometimes you get things in terms of being general, right? Then for utensils and all, we can find there is a particular method that is used. For something which is unique and which is basically antique, the amount will vary based upon the GST as well, right? So in this case, the correct answer is HSN. Next point, in India, GST replaced which of the following indirect taxes? Is it value added tax? Is it service tax, or both value added and service tax, or income tax? Income tax is a direct tax, everyone. If I earn money, it would be a part of it. I'm sorry. In this case, the correct answer would be both. Service tax is basically levied on services, while when we talk about value added tax, whatever the value that has been added, we used to charge GST only on that particular part. Then everyone, next question. Which type of GST is levied on goods and services imported in India? CGST, SGST, IGST, or GST compensation cess? Acha, when we talk about when the goods are important to our country, this cannot go to a specific state. You know, then otherwise every single country would be, every single part of the country would be like, we need to we need to do our own things. You know, so basically when we talk about which type of GST is levied on goods and services, for example, okay, when we are buying goods, they are imported, you know, but till the time they are not cleared, they are termed as imported. So while you are trying to buy it, you will find out the IGST in this case. Ideally, what happens is whenever we are involved in terms of goods and services which are highly imported in India, then you cannot put SGST and CGST because that is not related to your service. है ना? So I would think of ki if when we talk about imported there, in terms of customs act, they have specified that nahi, you can collect the tax from this area. So in terms of this, that is IGST, that is integrated goods and service tax is levied as soon as I download something, or I would say as soon as we are providing any goods and services. I used to download the important papers and note it down, so that's what I just said. So in this case, the correct answer would be IGST. Done? Done, everyone? Next question. What do you mean by deferred tax asset or liability? As per Ind AS, what would you call it? I think let's make the question visible for you. Deferred tax asset or a deferred tax liability arises because of one specific reason. What's the reason? Difference between company's account as well as the income tax. Done? When we talk about Ind AS, Ind AS has got deferred tax. This is the difference in the tax or the profit in terms of the net profit as per the accounting system or as per the income tax department. It may vary. So this is what they will cover in this area. Which one of the following statement is correct about the deferred tax assets or liabilities as per Ind AS? Deferred tax assets should be classified as current assets, should be classified as current liabilities. Current assets should not be or should be classified as contingent. Deferred tax, it is temporary in nature, it would be reversed after a certain period of time. Just because it is going to be reversed in the future, that means it is not payable within a year. It can go even after that. You know? If it can go further, then the deferred tax should not be classified as a current asset at all, because that would be a wrong concept. Acha, here comes the section ATU. In which area do you find the section ATU? ATU is covered into the area of Income Tax Act 1961. When there is a what is the maximum deduction available for individual with disability? What's the maximum deductibility? There is one particular mistake in this particular area. I think I'm just changing it for you. चलिए 50,000, 75, 1,25,000 or 1,50,000. In this case, can we say that in terms of the books of accounts, ATU is basically the people who are disabled. They have one or the other kind of disability due to which they are facing a lot of problems. So what do they do in this area? What do they do? They exactly, if a particular person has a specific time of disability, then if it is not severe, then they get a benefit of 75,000. But if it is severe, then it can go up to maximum of rupees 1,25,000. That's why I had to change the question. The correct answer is actually C. Done. What do you mean by ATG, everyone? Okay. ATG, what type of donations are eligible for deduction? All donations made to any charitable organization, donation made by a foreign charitable organization, donation made to a specific eligible charitable organization, or donations made to a political party. What would be the value? ATG is totally located with totally based upon donations. All donations to any charitable institution, I doubt that. Foreign charitable institution, again, I doubt that. Then donations to be specific eligible charitable organizations. Yeah, this makes more sense. It is only allowed only in case of specific charitable organizations, not in all. And deductions made to political parties. Political parties and all is a different scenario altogether. This is not covered under this area. So I would say I'll go with C. Only to a specific amount, only to a specific person is basically eligible for deduction. Achha, everyone, next point, ATD. ATD, I can say D for doctor. So then when we talk about ATD, it is a type of deduction which is available for premium paid for health insurance. Full cost, whatever you pay, or deduction up to 15,000 for individuals and 25,000 for the senior citizens, or 30,000 for individuals and 50 for the senior citizens. What would it be? What is the, or no health insurance is available? What would be the limit for ATD, everyone? D for doctor. Doctor से हमको मिलती है दवाई. What we get from the doctor is medicine. So deductions under ATD is related to that area. Preventive checkups and all. For ATD, for adults like you and me, we can have around 50,000 rupees as deduction, and we can have up to 30. And the one who are old, who are above 60, they can do it for more than that. They can go up to they can be going up to 50,000 altogether. Along with that, we also get, in case we are having preventive health checkups, that is also allowed. That is also part of it. This is for the preventive checkups we follow. It can be maximum of 5,000 rupees. Otherwise, it can be more than that. So in this case, I would go with 30, and for senior citizens, it's 50. It is actually C. For you and me, it would be 30, and for any senior citizenship, if they are looking forward to it, then it would be rupees 50,000. Then, which section of the income tax provides deductions for interest income earned by individuals on their savings? Okay, whenever someone is earning, whatever your salary would be, you know. So if you are also having another source of income, that is your FD, That is your RD, and you have made good amount of money out of it. So if you have made a good amount of money, what would you do with it? One of the basic things is interest on FDs. Whatever the interest on FD would be. Okay, we are putting it in the saving account. Now, if we talk about this particular section says up to rupees, for example, it is 15,000. Up to rupees 10,000, there is no problem. Then after that, we say that out of this 15,000, out of this 15,000, that is the total there that I have kept for such things, and the income earned by individuals on saving account. So in this case, this is only up to the limit of 10,000. That if you try to save your money, then in terms of this area, ATTTA charitable work is kind of this in this area. What do? They would give you a deduction up to 10,000 rupees. That's the limit of it. So it cannot exceed that. Remaining 5,000 rupees would still be taxable. Okay. So then if I get interest on savings, it is completely taxable. The interest portion is taxable in my hands, and a deduction up to rupees 10,000 can be deducted in terms of ATD. Sorry, ATTTA. TTA and TTB. TTA is for you and me, and the people who are old, who are above 16, for them it is ATTTB. ATTTB. Done, everyone? Next point. In which type of the GST return is the taxpayer required to provide details of the outward supply? GSTR1, GSTR2, or GST3B, or GST4. In which type of GST return we'll say this basically outward supply. Outward supply is when you are supplying it to someone. You have to collect the GST and you have to pay it to the GST department. You know? So this is what they are calling about. So this would be the output return. When we talk about output return, it will be GSTR1. Just to make the output return. After this, they have series of things to be taken care of. There is a good number of forms available. It is all online now. So in terms of geometry, in terms of the GST, even the working has been better, and even their execution has been better. It is GSTR1. Everyone, next point is which body is responsible for administrating and implementing GST in India? CBDT, then GSTN, CBIC, or National Stock Exchange. But when the department decided that we will change these particular names, they were coming to Central Board of Indirect Taxes and Customs. They said that we won't continue with the other. What we are doing is, as we won't go as per the Finance Act, we'll be looking forward towards our own identity. Then this particular act, which subsumed excise, this subsumed the area of the CBIC, has definitely make sure that everything is under its control in terms of this area. Then CBIC means all the amounts which are supposed to be paid in terms of GST, if there's any litigation required, how do they work accordingly to it? Right? So in this case, what would be the answer? CBDT, CBIC, and then we have GSTIN or NS or NSC. In this case, the answer would be CBIC. Central Board of Indirect Taxes and Customs. Customs Act still exists. All the other acts have been subsumed now. We still import goods from outside India now. There they put IGST in terms of the basic taxation, but rest everything, terminology is their way of working, everything is same in terms of that area. Acha, conversion cost is a summation of what? The direct material, direct wages and direct overheads, direct wages, direct charges and work overheads, or none of the above. How would you define it, everyone? Conversion cost is a summation of conversion means to convert from raw material to finished goods. है ना? That would be raw material to finished goods. And how do we work upon this? We work upon this in such a way that it includes direct material and direct wages and overheads, direct wages, direct charges and overheads, or none of the above. What would be the answer, everyone? Quickly. When we talk about this area, that means when we are talking about conversion, this includes everything but not material. Always remember. Why? Because this is basically material, labor and overhead, and this is indirect material, indirect labor and indirect overhead. We have got these things. These are called all direct and these are all called indirect. When we are looking at direct material, this is something which is being converted. So won't it be like this? Direct labor, then direct expenses, indirect material, indirect labor and indirect expenses. All these things would be added. That means the answer would be C. Because two things are given and work overheads are basically given together. Writing it again, everyone. Direct labor, direct material, then direct labor and direct overhead. So one is indirect, then there is indirect material, indirect labor and indirect overhead or expenses. Overheads are basically the expenses which are other than the main one. So we call it direct expenses on the above side. So all those expenses are clubbed together. Then we find out our works overhead. Next question. In the inventory valuation, which method is not used and why? Not written why, but let me ask you why. Which one of the following is not an inventory valuation method? LIFO, FIFO, weighted average or EOQ? FIFO, LIFO, weighted average or EOQ? Do you know when it comes to the area of inventory valuation, normally it should be recorded at cost or NRV, whichever is less. But do you know there's a particular method which they do not use in their country? Done. FIFO is first in, first out. LIFO is last in, first out. Weighted average can be set as the weights are assigned to different areas and they become more important or less important. And the last is economic order quantity. What quantity should be ordered at what point of time that we can have more in future as well. We will have time to it. Okay. So that is FIFO is whatever comes first goes out first. Then LIFO is whatever comes last will go out first. That is wrong because the trending price of today would be sold. Then what about the previous things? First of all, we have to finish the previous and then we continue further now. So in this case, the answer would be LIFO. LIFO is not allowed. Even as per Ind AS, it is not allowed. Even in the custom, we understand the concept of LIFO, but we do not use it for inventory valuation at all. Done, everyone? What when the work is certified is 1/4 or above but less than half of the contract price has been definitely gone by. The notional profit to be predicted to the profit and loss account will be equal to the income. So whatever the profit would be, one third of the notional profit into cash received into work certified, or it would be half of the notional profit or into cash received divided by work certified. Then we have 2/3 or we have 100%. It in terms of losses only we recorded 100%, otherwise we do not. Then think I'll in this case we're talking about 1/4 now, till 1/4. That means 0 to 25%. You do the work as nil. Okay. In this case we do not charge anything after 25, but up to 50. That's another point. Then after 25, that is we are looking forward towards more than 1/3, more than 1/3 actually, if we have to say, that means 2/3 there. Now this 2/3 they will record the particular amounts there. In terms of this, if it is 0 to 25, then we have 25 to 50, we have it for 1/4. Then 52, I think when we talk about it, 90 and above, it is full. Then in terms of, then we have 50 to 90%, there we record it at 3 by 4. We will record it at, for 1/4 it is 1/3 and 2/3. 1/4 is the portion. So this is basically, but less than half. More than this, but less than half. It would be 1/3. It is 1/3. Look at this, all the things I stated here. Let me just make it more clear to you. Visible, everyone? If the work certified is 25% or more, but less than 50% of the contract. 0 to 25, nil. 25 to 50, it is 1/3. And then 50 to 90% roughly, it will go up to the area of 2/3, and above 90%, that means the work is almost done. By to put in terms of notional profit, we can record the entire profit as well at that point of time. Okay, that's the formula in terms of contract costing. Okay, now let's continue further, everyone. Here comes the next point, the question related to the standard pricing. Now let's look at this question as well. This question says that which of the following equations can be used to calculate material quantity variance? One of the best ways to find is, we're talking about material quantity variance. Always take the quantity variance in between. That means we have standard cost minus standard quantity and actual quantity. Okay, it's gonna be, this is material quantity variance na. Then we will have the standard quantity and actual quantity here, and we will have the standard price outside. What would be the question here? Based upon this is the way I learned it. So in this case, you can also learn it. They're talking about material quantity. So the quantity should be in between, not outside. And outside you will take standard quantity. So can I say SQ into SP minus AQ into SP? So in this case, can we say the answer would be C? Actual quantity into standard price and minus standard quantity into standard price. That means we're trying to find whatever the difference is coming up here. Done, everyone? Okay. Moving on to the next point. Okay, it is related to the area of idle time. Let's adjust it a bit for you. What do you mean by idle time? Idle is basically the time where we are paying the person but he's not working for that long. You know, the causes of idle time may be breakdown of a particular product. It may be, for example, a machine breakdown, or it can be related to some other working that we cannot do. Idle time can be for multiple reasons. That is the internal reason of the organization, or we can say the external reasons of the organization as well. It can be either of these. Now, what would it be? Idle time when direct labor employees are being paid but have no work to do. Sometimes we pay them. Why would we pay them? Because if there is no work and if we do not pay them, then they will go to some other organization and my skilled labor is gone. A breakdown in product, for example, a machine breakdown that halts the production process, time spent waiting for work due to bottleneck or holds up at an earlier stage in production process, running out of vital direct material, having to wait for a new delivery of material from a supplier, or all of the above. What would be the answer? Idle time occur when the direct labor employees are being paid. They are sometimes being paid while they are not even working. What would be the answer in this case? In this case, the answer would be, I think, all of it. If the machine breakdown is there, then there is some bottleneck activity, which is basically not allowing us to do something about it. Running out of a vital direct material, one of something which is required for production at this point of time. Machine cannot run. That can also be there. So will it be all of the above? Yes, it will be. Then comes the responsibility center, in which inputs are measured in monetary terms and outputs are not recorded in, is called expenditure center, profit center, investment center, or revenue center. What would it be? A responsibility center in which inputs are measured in monetary terms. We're just talking about inputs now, we're not talking about outputs. This is totally related to the area of expense. Abhi to we are just spending money. Whatever we'll make out of it is a different scenario altogether. At this point of time, we are just spending. Okay. What was break-even point? Break-even point is that point where whatever we are putting money into it can be recovered properly. Which of the following would take place if a company is able to reduce its variable cost? Contribution margin, break-even point. Increase, increase, decrease, decrease, increase, decrease, or decrease, or increase. What is the particular point according to you? If country regarding divided by margin increases, our break-even point will go up. What will happen to it? Our break-even point, will it go up or go down? If contribution upon margin both increase, then okay, when country upon margin is increasing, that means we are making more money right now. That means our break even point will come further, it will come nearer, it won't be far off, it would be very near to us. So I believe the answer would be increase and decrease. If your sales minus variable cost comes out to be 10,000, normally now when we say break even point was at 10,000 units, now your contribution is increasing. If your contribution increases, that means you're able to recover the money before time. That is C there. That is, increase in the contribution margin will have a positive impact on the break-even point. Done, everyone? This is the formula. Sales less variable cost will give us the contribution. And then we, for the break-even point, we use this formula actually. Break-even point is equal to country upon, it is actually, sorry, fixed cost upon country. fixed cost upon contribution. So as soon as you receive more money, your break-even point will come nearer. Next question is based upon concepts of accounting, which is called uniform costing. Visible, everyone? Uniform costing is a kind of costing which is used in terms of a single enterprise having a number of branches, each of which manufactures the same set of products with the same facilities. It is number of entities in the same industry bound by trade association in a number of units across different geographical locations, manufacturing one or more of a given set of products, or in different branches of the same company, each branch making a different product using a different unique process. Uniform means having uniformity. Matlab everybody having a uniform or similar way of working. So can we say we can have different branches of the same company, they can have a particular way of working which is different, but they are still Acha, the question is actually asking which is not fully or successfully applied. When you are all unique, then you cannot have one particular method. Na? Then it would be called the different branches in the same company, each branch making a different product. Everybody has a different product, different units, different maintenance factors. All those things are different. Na? So when this thing happens, then what will happen? When you don't have any uniqueness, then you can go for uniformity. If it is, then we have a problem. Which of the following is an example of progressive tax system? This is a question of taxation, everyone. Flat tax, regressive tax, proportional tax, or graduated income tax. Progressive means something which increases with the increase in income. That is called progressive. Which decreases with the increase in income. That was regressive. Matlab, in terms of GST is basically a regressive tax. You have to pay 5%. It is huge number if the person has a very less amount in his pocket already. If you have 100 rupees and 5 rupees is very hurting for you. If you have 1 lakh, then paying 5,000 will not make a big difference to you. So that means that is a regressive tax. While when we talk about progressive, that will increase gradually over the period of time. So what would it be? That would be graduated income tax. In terms of income tax, we have slab rates. For example, in the old tax regime, it is 0 to 2 lakh 50. For a normal person like you and me, 0 to 2 lakh 50, it is nil, no payment of tax. Then 2 lakh 50 to 5 lakh, it is actually 5%. 5 lakh to 20 lakh, it was actually 20%, and then 10 lakh and above, it is basically 30%. So the slab rates were 5%, 20%, and 30%. This is old tax rates. Then they introduced a new tax regime as well. I think let's talk about the new tax regime in the next session, that is in the marathon. And so everyone, reminder, tomorrow we'll be having a mega marathon starting from 6 p.m. onwards. It's gonna continue for a longer period, and at the same time I'll be covering all the modules, not one, not two, but all the modules are covered in it. Okay? Next question, everyone. It says that in which section of income tax is the procedure for filing income tax returns is outlined? ATC section 10.